Morning all, how are you all doing? Excuse me. Sorry to cough straight in your face as soon as I come on. I've got a cough, which I can't get rid of. How are we doing? Sorry, I'm a bit sweaty. Come back from the gym. How's everybody? Morning. 1 second. Right. How are we all doing? Morning, Danny, Jerry, Egosa, John, David. Happy New Month, Martin, Kennelly, it's time. Amy, Steve, Dreska, how are we all doing? New month. So had a fair bit of movement yesterday, last day of the month. January, February, March, April, May. Not the last day of the quarter. This is the last. This is the new second quarter end. So bit of movement yesterday across the board, really. Canadian dollar seemed to have an awful lot of movement, but looking at, I haven't really had a good in-depth look at the market yet this morning, but the Canadian movement that we had yesterday. Oh, sorry, I've still got my testing results up. Sorry, I just haven't looked at these ones. I'll look at them in a minute. So yeah, that movement we had off the Canadian dollar, it's pushed back up again, retraced 50% of it. So potentially we might have some more Canadian movement coming through. So all the CADs basically went on a huge run, which was nice, banked quite a bit of profit off of them. But obviously did an awful lot of drawdown control yesterday. There's a lot still squeezing. This New Zealand dollar is just not able to do anything. New Zealand dollar is in all sorts of trouble. So, yeah, we'll have a look at all of those in a bit. Morning, Marco. So, news today. The JOLTS job openings yesterday was one of the main things. This doesn't often move the market, JOLTS, but yesterday they really moved it off of that. So they used this as an excuse yesterday to unwind a lot of positions, I think, and do some profit take moves. Last day of the month, or last couple of days of the month, usually you get very big, fast movement because they basically have targets to hit. So they basically will unwind positions to bank profit and just get the books flat. So that they used yesterday to move a lot. So big movements off of that yesterday, not usual. Today we've got the CPI flash for Euro. It's yearly, not the quarterly, so it's less important. But even so, they are forecasting a drop. If we don't get a drop, we get a pump. If we get a positive number, we will get a move to the upside on the Euro. We've got non-farm employment at 115, and then unemployment claims, which is the important bit, at 130. And then we've got PMIs at 3. So there's a lot of news around the New York Open this afternoon, so we might find we get a very dodgy move basically off of the New York Open, but we'll see. And then tomorrow is non-farm payroll, obviously unemployment rate. So overnight news, I haven't had a look yet. Let me just whiz through. Debt ceiling stuff, which is pretty much a given, I think. 72% chance of a pause in June. So, I mean, yes, I was saying yesterday about this Fed, the way the Fed is screwing with the US dollar at the moment. US futures pricing 72 chance of Fed pause in June. Yesterday morning, they were talking about rise. Now they're talking about a pause. Same day this is. You literally, it is. You have to flip a coin at the moment. There is absolutely no way to forecast anything with any currency right now, because until the US has decided, are you or aren't you going to do something with your rates? Are you or aren't you going to default on your debts? The market is sitting at the moment going, not interested. They're not interested in the US dollar. They're pumping their money elsewhere, which is why we're seeing these big moves on other currencies, which are inverse, I think, to what we should be expecting. Pause at the coming meeting doesn't mean rates at peak. Can't read anything into anything at the minute. So it's just an absolute mess. There you go. Look, US futures pricing 71% chance of a June rate hike. Yeah, that was at 3:15. Fast forward to whatever time it was. 735. Actually, no, we're now pricing in a 72% chance of a pause. Give up. Just can't read anything into anything at the minute. Right, let's have a quick look. How long we got? 3 minutes. I haven't even looked at the VPS yet. Have a quick look at the strategies yesterday. Lot of drawdown control yesterday. Everything's getting a little bit squeezy. So losses across the board yesterday and this morning, and still big DD. So we're just waiting for some movement, basically. When you're ready. So where are we? What are we on? ADRs. This is this. So we're on a new month now. So last month, I didn't look at last month's figures. Should have taken a screenshot. What did we end up on? 25. I think we ended about 60% on the month, 60% up, something like that. So good month overall. I didn't get a chance to do a video or anything yesterday. But this is ADR reversals. 0.23 drawdown yesterday, 0.74 drawdown done this morning. Obviously, it's the first day of the month, sitting in 0.74. 10.6% drawdown. The only thing which is getting, well, actually, there's a couple of bits. The pound Swiss and the pound odd getting a little bit stretched at 2%. Pound New Zealand. Look at that, 3.72% on the pound New Zealand. Really stretched. So ordinarily, that would be a contender now for drawdown control. If you were in that, if you are in that. So yeah, drawdown control ready to do on that. Pound New Zealand on the hourly as well. 2.74. I have got an aggressive drawdown control position on this. Put it on yesterday. I didn't put a stop loss on it because it was overnight. I didn't want to get stopped out overnight. So I'm going to set that now. 750. So that's 0.75% drawdown. So that's my aggressive drawdown control position. Can't see it. Market's going to open in a minute. Oh, market's open. Sorry, I just wanted to test the ORB, new version of the ORB, but it's put a sell limit in. So didn't manage to get the order triggered in time. It has pushed up and triggered the order short on the pre-market 5. So this is the new version that I've been working on with the opening range breakout pre-market. So I've scrapped the idea of re-entering immediately. That just doesn't work. It's too difficult to run. So what I've got is an option now to have the opposite order left in the market or deleted from the market. At the moment, I've got it set to delete. And what it will do is basically, if it hits target, it will stop trading. That's what we're looking for. We're looking for these pre-market ORBs to either be the money banked and we're off, or it's not. If it goes into loss, i.e. if it triggers that way, basically, and takes a loss, if you haven't got it set to automatically go back the other way and try and get out of that way, and it makes a profit, it will stop trading. Happy days. If you haven't got it set, like I have, to go the other way immediately, what it will do is it will wait and monitor the market and wait for an inside bar to form. And then as soon as it finds an inside bar, it will then take a break of that inside bar. Idea behind the inside bar being is a pause. So what we're doing is we're monitoring the initial pre-market break. We're taking that trade. If that trade works out, thank you very much. We're done for the day. If that trade doesn't work out, we want to wait for the market to put in its initial move and then pause. When the market pauses, we will then jump in wherever the market goes next. So the idea behind the open is we obviously have the pre-market open. The market then puts in the initial cash balance. The initial cash balance move quite often can be a fake move. Sometimes it's not. It's a pullback and then it's a rally. We don't know. Obviously, that's the whole point of the opening range breakout strategy. It goes with momentum. So we take those pauses and we break out after the pause has happened. So if it becomes a false breakout and runs back the other direction, we take that run. Yeah. So we take the move from down here back up. If it's a pull back, pause and continuation, we take the continuation second leg. Yeah. So that's what the EA is designed to do. So far, testing is looking very good. Generated 120 grand in the last year. So that's off 0.5% risk. So it looks good. So I just wanted to monitor this and see what it does. Annoyingly, it looks like it might hit TP, which means it's not going to. I'm not going to be able to test the additional functionality, because if it hits target, I'm done for the day. 750 done. Obviously, either 750 or 3.5 grand. But at the moment, it's not really interested either way, is it? So let's just quickly recap the rest of the strategies. So that's the H1 M5. That's done 0.7 drawdown control yesterday. Heavy drawdown control yesterday, 2.34% out. The H4 M5 strategy did very similar, 2.27 DD yesterday, 0.31 DD today. We're sitting in 16%. Pound New Zealand. That thing is just off the charts at the moment. That thing is gone. So as you can see, everything is in a little bit of a squeeze at the moment, but nothing else is getting, everything else is getting to around the 1 to 2% mark. This thing's taken off completely. So that's the contender for aggressive drawdown control. 20% on the H1 strategy, banked 1% today. 0.75 drawdown control done yesterday. So that's yesterday's results. Not good yesterday. Right, so what did that do? Right, so let's stop out with a negative. So what it's doing now is it's monitoring the market on your initial 5 minute. It's very, very close to hitting target there, but it stopped out with a tiny loss. So what it's going to do now is sit there, monitor the market, wait for an inside bar to form, wait for the market to pause, and then it's going to put bracket orders outside of that inside bar, and it's going to take the break of that inside bar, basically. So the only way this really fails is if you get an inside bar followed by a outside bar, and then the break. That is its Achilles heel. There's always, every strategy has an Achilles heel. That is this one, right? So if, let's say, for example, we get, that's our 5 minute opening range, which it will be. There we go, there's your 5 minute opening range in. So if this next candle was then to be an inside bar like that, yeah, we bracket this, looking for the break. If then the market does that and puts in an outside bar, which is again a second pause bar, that we can't win. Yeah. But what normally happens is after you get your inside bar, you get a break of that bar, either as a higher high, higher low, or a lower high, lower low. And that then starts the second leg. And that's what we take as the second entry. Yeah. So it's going to wait now and monitor and wait for an inside bar to form. So it's going to wait for a pause in market movement, basically. So I'll come back to that in a minute. Let me just open up history just so I can see, just in case I miss it. So looking at the DAX, so yeah, so I've got, so going back to this pound New Zealand quickly. So I've got, yesterday, I took an aggressive drawdown control position here, which is this 1.3. The reason I took this manually was at the time, we had 2.6 lots on. Yeah. So that is 50% of the current open lots. So I took that trade yesterday here. I didn't put a stop on it purposely. It's risky, which it is a risky thing to do, but I didn't put a stop on it purposely because the New Zealand dollar is notorious for its spreads and swaps. So I didn't put it on because I didn't want to get stopped out on a stupid candle overnight. So I've just put the stop on now, which is 0.75%. So either that's going to hit me there or it's going to pop down. The EA has also taken another position at this level. So I've got double on there basically now. As you can see, the average is now up here. My target for this trade is basically just down roughly at ADR. So looking basically for an ADR move down. It doesn't look like it's going to do it today. It's quite possibly going to stop me out because this thing just is not stopping. So we'll see what happens with that one today. Quickly looking at the DAX for direction today. So there's your 5 minute opening range break. So there's your ORB. ORB is long. So as you see, if I had left the opposite order in on this, and again, there's no right or wrong with any strategy. I've got it set up at the moment in the settings to basically delete the opposite stop. So if stopped out, re-enter on inside bars, delete opposite pending order when triggered true. So what it did was as soon as it entered that one, it deleted that one. You can set that to false, so it leaves this in place. So what it's doing is it will get down, hit target. If it hits target, it will cancel off the opposite order. If it doesn't hit target, you can leave that one in place. If you'd left that one in place, as you can see, the TP's there, you'd have hit TP. Right? So that would have been a TP in the opposite direction. So you'd now be sitting in $250 of profit with a runner as well. So that's the other option, basically, which I should have really left playing today, shouldn't I? We'll monitor that. So looking at the DAX, we've still got the gap fill from yesterday, which we didn't get to. So we were looking at that run up yesterday, coming up to the gap fill and to the previous day's low, which we just missed, and then it absolutely collapsed. Look at where it bounced yesterday. Yeah. Talk about a limit order trigger. Oh no, that's last month's low. Sorry, I was going to say that looked like it was a previous month's low. That is actually now last month's low, isn't it? Because it's yesterday, new month. So we've got last month's low in there, but look at where it bounced, basically. I was going to say it looked like it hit to the pip, but it hadn't. But we looked at this area yesterday for a bounce point, didn't we? And that's exactly what we've done. So if we are going to form a new range now, this is an expanding range. So if you look at the DAX previous movement, we got stuck for the entire month in that range there. Then we had a big expansion, price discovery, which failed. We tried price discovery again and failed. So we're back inside this area of balance. So there's two options here. We either now try a price discovery to the downside, get that gap fill done, or we're going to hold this low and we're just going to range. So it's difficult to tell where we're going to go from here. There's obviously this gap fill, which makes an obvious long today. So easy to get a long bias on this today and just hold a long and hope that we're going to get up to the gap fill, which is from where we are now, 3/4 of an ADR, about 110 pips. So that's the obvious easy long play today. And also, coming up, but that's 175 ADR. We've got ADP non-farm employment today. Unemployment figures, doubt it will do that. We're waiting for the rates tomorrow, I would imagine. But there is obviously the chance of this being a new leg down as well. So this area here may well act as resistance, exactly where we are now. And we might find we get a break back to the downside. If we do, then it's going to be just a continuation short on this move. Yeah, so just keep going down and get that gap fill done to the downside. So those are your options on the DAX today. You've got a fair bit to find that gap again, but there it is down there. We've got a micro gap there as well, which is around about 175 ADR, but that's the main one to aim for. It's about 300 ADR or so to the downside. So lots and lots of room. Just catch up on the chat. Could you explain commission fees and swap fees? Well, commission is what you get charged by your broker for each trade, round trip. And swaps are the overnight change in exchange rate. So, best thing to do is just Google swaps. Swaps are just the cost of doing business. Everything's a cost of doing business. So I don't pay any attention because you can't avoid them. So if you use spread betting, you won't get charged commission. And if you use certain brokers, they don't charge commission, but they charge a bigger spread. So depending on the time frame you're trading, depends on what type of broker you want. So if you're scalping all the time, as you can see with the DAX, I've virtually got no spread whatsoever. That's what I'm after. I don't want any spread. If I'm position trading, I couldn't give a monkeys at the size of the spread because I'm holding stuff for days sometimes, most of the time. So whether you give me a 2-pip spread or a 5-pip spread, doesn't matter if I'm holding it for 3 days, does it? It's just cost of doing business. So if you're scalping, you would typically want a commission-based broker. If you're long-term position trading, initially I would go with a spread betting broker like IG if you can get the spreads, the leverage, which I don't think you can. But spread betting in the UK anyway, there's no commission, there's no tax on it until it becomes your main income. So because it's classed as gambling. Yeah, and swaps is just what you pay for the overnight exchange, basically. So If you want to know the exact way swaps are calculated and everything, just Google it. It's all on Baby Pips and lots of websites. But I wouldn't worry too much about it. Can't get around it. So, John, New Zealand dollar just won't recover. Been waiting for a week now. I know. Bloody thing. Hopefully, they're just going to take out yesterday's high, this high from Asia, and collapse. That'd be nice. I don't stop sweating for about half an hour after I get back from the gym. Always a mess on a Thursday morning. Yeah, so New Zealand dollar, we've got, it's just not stopping. It will stop. It's just not stopping at the moment. It's bizarre. This the New Zealand dollar quite often is one of the highest ADR pairs out there. The pound New Zealand dollar historically has always been the highest ADR. And the reason being is because the pound New Zealand is cross, if you look at ADRs, so pound New Zealand at the moment is sitting at 178. So it is still the highest out there. Even though we've got contracted ADRs at the moment, it is still the highest, 178. And the reason being is because you've got a European pair against an Australasian pair. So we're the completely opposite side of the world. So when the New Zealand dollar is being manipulated, the pound is asleep. When the pound is being manipulated, the New Zealand dollar is asleep. So you tend to get big pushes and pulls. And it makes it typically one of the most beautiful things to trade, because you get pushes and pulls and pushes and pulls. And it's really, really easy to make money out of. When you get a situation where there's nothing but pull on one currency and nothing but push on the other currency, which is what we've got at the moment, the pound is rallying nicely. The New Zealand dollar is absolutely collapsing with no strength at all. That's when you get these parabolic moves and you get caught by these squeezes. This move here, I've read completely wrong. For some reason, the market has decided that a positive interest rate is now a negative thing for a currency, which has been the opposite for the last 100 years. So they decided now, actually, nah, we get a good increase rate, we'll just tank it. Which happens when they overshoot. So what happens is the market, when we have an interest rate released at whatever it is, we then get a press conference with forward guidance. And the forward guidance is what tells us what they're likely to do with interest rates over the next month to 3 months, which is why we keep an eye on financial juice and why I'm saying, look at this. When they say they're going to do one thing and then they change their mind and they say they're going to do something else. It's very important. The market pays massive attention to it, because if you're going to put all your money somewhere, your billions, you want to put it where you're going to earn the most money. If someone's got a high interest rate and they're going to increase their interest rates, that's where I want my money. That's basically how it works. It's the same as a bank. If you're a millionaire, you want to stick your money in a bank with high interest. If you're a billionaire, you stick your money in a country with high interest. So, when you get a movement like this, what it means is the banks and institutions were expecting a higher interest rate than they actually got. So when the figure came out, they were expecting it to be a 4 and they got a 3.75, for example, which is what happens with the euro. So what happens is the euro tanks, because all they're doing is they're pulling the money out that they thought they were going to earn extra on, because they can't. So they're just basically taking the profit out of the move, because they're not going to leave it there because they can earn better elsewhere, or they don't earn as much as they want. With the New Zealand dollar, we weren't forecast a higher rate. The fact that the market may have factored in a higher rate is up to them, but we weren't forecast anything higher. We got an as expected rate, but they're scaling out and they're not stopping. So this is what you would expect to see, this type of movement, when we get an unexpected result. So go back and look at the US dollar Swiss, when the Swiss decided to change their interest rates unexpectedly. Yeah. They were expected not to change interest rates. They decided to change interest rates. That happened because the market was not factoring in the fact that the rates were going to change. Yeah. So the Swiss franc powered up for literally 3 days, solid 300 ADR, just went vroom, because the market was like, Christ, get your money in the Swissy. And it continued to pump it. That's the sort of move we expect to see when we get something like that. Not an expected rate that's positive for a currency. This just doesn't make sense, this move. There's nothing you can do about it. You're in it, you've got to stay in it, and you're stuck. So your choices are you scale out, you take the loss and you walk away, or you wait and sit through the pain until they do the profit take move, which they will do at some point. Even if it's that. Yeah. So you see the size of that movement there and then that. Size of that movement there. If that's all we get, fine. Look at my average. That's all I want. If you give me 150 ADR to the downside, I'm going to bank $1,000, $2,000. More than pays for the drawdown control done so far on this thing. It's not a problem. It's just a case of when you've got multiple positions on in one currency, this is why we have the exposure rule. You're going to get squeezed twice as hard or 3 times as hard if you've got multiple New Zealands on. So just a big push at the moment on this thing. And the other danger we've got at the moment is US dollar strength and Canadian dollar strength. If that happens at the same time, which is what we've got with the Canadian dollar rallying massively hard yesterday, you get that extra strong push. But whenever you get an extra strong push, you get an extra strong snapback. Yeah. So the move back, what you'll find will happen. You'll get 2 or 3 4-hour candles, which literally go bang, bang, bang. And you'll go, what? All of a sudden your P&L will go from minus 10% to plus 5. You'll be like, well, what was I worried about? You just have to sit through it. It's one of those things, isn't it? That's position trading. You're getting rid of the death by 1,000 cuts and replacing it with constant pain, but not constant pain of losing your money all the time. Morning, outro. Morning, Stevie. Morning, Brian. Morning, Virginia. I'm now long on the DAX, stopped short for break even and stops now break even long. Good man. So you've done what I should have done with the EA. So so this pre-market 5, yeah. If we'd have left that order in, so we lost $50 on the short. The long would have made $750 there and trailed probably 106, somewhere around there. I would have stopped out somewhere around there for around about another $1,000. So total profit 750, 1750 on the break short, break long. That's what it's designed to do. So it works beautifully in that respect. But I haven't done that, and I purposely haven't done that this morning because I was hoping we were going to get stopped out so I can test the inside bar break functionality. We've got 4.5 minutes on this candle. So what I'm waiting for and hoping for is that we just basically potter about here for a bit and get that inside break so I can test the inside break function. So what I'm looking for now is false move, rally down, or push, accumulation, or flag, break. And that will take the second leg of the move. See what happens. Kidu, morning. Hey, Abe, thank you for your share about. Oh my God, I'm saying hello to a bot. LPFX, free signals. You recommended it to me last week. I Googled them. Really much profits. Thank you. If only you could speak English. LPFX. Haven't seen them for a while, have we? Report. Unwanted commercial content or spam. Bye-bye. Why has it not deleted all of their chats? Bye-bye. Morning. Got into Euro odd long, added to the position 5 minutes ago, and the price has left. Where's it gone? So I've got my volume up. I'm just watching a trade on the other monitor. So Euro odd. Going to along at 164, 130. Somewhere around there. Probably 15-minute reverse alert, is that? Yeah. So 15-minute reverse alert long. Hopefully that keeps rallying. We will see. So we haven't got an inside bar on the DAX. there. Took gold sales for a 1% gain. Good man. I'm not looking at it yet. Morning, Andrew. 1R rocked. 1R locked on long. Good one, outro. Good man. Peter, any idea why Trade Manager is showing 0 all-time profit, although there's profit on the account? If you've got no profit, if it's showing all-time profit as 0, you will have this set to, your account history will be set to last month. See that down there? So set it to all history. So I think sometimes MT4 defaults to last month, so it'll only show you the last month's history. And obviously today's the first day of the month, so everything else will be reset. So if you set it to all history, that will show you everything in your Trade Manager. And that will all populate. The no-nonsense Forex traders are happy with New Zealand dollar pairs right now. I don't even know who they are. No-nonsense Forex traders. Why? What do they do? Pound Swiss targets. Up to you. My target's half an ADR. I will be getting out around about 32. So my target's going to be around about 125 ADR, somewhere around there. I would look at that area there. I would look at ADR basically as your target. So we had this big old rally yesterday. So the Swiss franc died yesterday. So that is potentially a target for intraday, which is ADR today, 125 to the downside. Hourly, this accumulation, that propulsion gap there. But you have got this propulsion down here. So your question is, are we looking for a continuation bounce or are we looking for an A-shaped recovery? You decide where your target is. Do you want to take that or do you want to go for that? The decision is yours. Would the inside bar strategy would be done with the current opening range breakout EA? No. You can do the inside bar strategy with the Price Action Toolkit. Trend. Are they trend traders? Are they the no-nonsense Forex traders? But the trouble is, though, the no-nonsense Forex traders, if they are developing trend strategies, yeah, how many of them would have taken a trade from here? They would have all taken some kind of breakout trade to get into a trend, yeah? How many of them are holding this still? And this is the problem with trends trading, yeah? Because the market mean reverts 80% of the time, as a trend trader, your strike rate is usually somewhere between 25 to 35%. It's pretty typical trend trader strike rate, trend strategy strike rate. 30% is the average. So if 70% of the time you're getting stopped out, right? When you get a trade that starts to work, you're watching it like a hawk because you're instantly expecting it not to work because 70% of your trades don't work. So if you got there, for example, and your stop was down here, or you had a 50% of the range stop, for example, stick a fib on it, right? Let's say you broke out there and you took a 50% of it. You're sitting at a 2R after 1, 2, 3, 4, 5. So 5.5 days into your trade, you're sitting at 2R on a 30% strike rate. That's break even. Yeah, every single one of these pullbacks, you're papping your pants because you see, oh, look, it's going really well. Oh, no, it's going terribly. I'm going to take it. This is why trend trading doesn't work. It works on paper. It works in testing. It works if you put it on an account with an EA and never look at it again. But you don't. And as a human being, every time this thing pulls back, let's say, for example, today, we get a bearish engulfing. So yesterday's candle, yeah, looks like this. No, it doesn't. Yesterday's candle looks like this. Right? So that's Wednesday's candle. Let's say today's candle. So we opened there. Right? Let's say today's candle looks like this. And it's down. That's obviously up. As a trend trader, after seeing bull candle, or actually doji, bull candle, bearish engulfing, what are you going to do at that point? Take it. What have you got? 2R. What do you need as a trend trader to make money? At least 3R, but you're always shooting for 7 to 10. And that is assuming that you only had a small stop on it and didn't have a big stop and you're only sitting at 1R. Probably 0.75. Almost impossible. Trend trading strategies are fantastic. They look really good on paper. But when you try and trend trade, actually try and do it, this is and don't forget, this is a monster parabolic move. Most trends are like that. Most nerve-wracking way of trading in the world, because every time you get into a trade, it will always come back to break even. So immediately, the first thing you do as a trend trader is you see a profit form, and then you see the profit removed from your account. So what do you do when it gets back to there? The next time it gets into profit, you put it back to break even. If it turns into a range break, you're stopped out to break even before it goes. If it doesn't turn into a range break, and it just goes like that, you're going to move your stop up to here to lock in some profit, or you're going to take 50% of the position off up there, and then you're going to get stopped out for break even on the second half of your position. It's so difficult to actually get a positive risk reward over a long period of time with any trend strategy. I've tried millions of them, and it's just my psychology. I can't hold it like that. I just can't hold the trends. Looks great on paper. It's so easy. Market structure is easy, isn't it? Look, low, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, lower, high. Oh, get out. So what you make is that. What you miss is that. You lose because you see a lower high go in and you think, oh, the trend's over. We've gone into a range. I better get out my trade. So you never, ever get the trend. You look at it and go, wow, if I'd have entered there, I hadn't got out there, I'd have made 10 to 1. No one on the planet gets out there. Everybody gets out here. Because as soon as your profit, your P&L starts going down, you jump. This is why the market moves like it does. Because if everybody sees their P&L dropping, everybody starts to sell. If everybody starts to sell, the sellers jump on board and the move gets faster. And as the move gets faster, more people jump out their positions, which is why 80% of the time, the market does that, or that, and not that. Because you've got to have some serious balls to hold on to a trend like that, or you need to be a bank or multiple institutions trading in the same direction at the same time, where it doesn't matter because the market's just going to get pushed to hell, like pound New Zealand at the moment. Very, very difficult. 80% of the time, we're mean reverting, even in a trend. So become a mean reversion trader. 80% of the possibilities are yours. 20% of the possibilities are the trend traders. Leave them to it. Yeah, they're going to get the odd one where they go and post in Telegram, hey, look, I got in down here and I've made a 15 to 1. Well done. That's your trade for the year. Shout about it because you're only going to get one. I think it trails 1.5 daily ATR. Yeah, so basically, No Nonsense Forex was one of the first people, wasn't the first person, one of the first people on Telegram, on YouTube to actually start talking about, hey, don't use pips, use average true range. What have I preached for X years? Pips are irrelevant. No point. ADR, it's always important. What's the average daily range of the instrument you're trading? Everything you do should be based on the average daily range of what this thing moves. So ATR, daily ATR is ADR. So he preaches 1.5 ATR as stops, isn't it? So I think some of the strategies that they do isn't with trends. It's all based on low time frames, M15s, hourlies, using 1.5 ATR as a stop. Absolutely brilliant. Don't have a problem with that. The only problem is when you get your signal during Asia and the ATR is that big, when the normal ATR is that big, when you're trading London and New York, you are going to get stopped out if you base your ATR on an Asian ATR when you're actually trading a London session ATR. It's not going to work. It doesn't work. Daily ranges, that's the only thing that works. Which is why the banks and institutions trade daily charts. Not interested in intraday movement. It's chop. It's algorithmic. It's rubbish. We haven't had an inside bar form yet. So I'm just going to wait. See what happens. Right, we haven't done any analysis today. We've just been waffling, haven't we? So ADRs, there is none. Monthlies, there is none. It's first day of the month. Weeklies, we've got some. So there's a few weeklies to look at. Oil. So let's have a look at oil to kick off. This thing's completely confusing at the moment. So we got the bounce off of the low. So this is the weekly low that we were looking at. We got the bounce and it's just pushed back up and back down again. So we've got the breakout. The market structure is now invalid. Yeah, so we were looking for a low, high, higher low, higher high, higher low to form above that. We didn't get it. We got a bounce, which we thought maybe it's going into a range, collapsed straight back down into that low. So basically what we are now doing is ranging here. So the price discovery failed. We're back into balance. So the question is, which way? Market has forecast that way, although I haven't heard any recent forecasts. So we could be completely not going long now. And we're entering into symmetrical triangle contraction at the moment. So at the minute, I'd be watching for a breakout in either direction. No idea which way it's going. This is a bearish symmetrical triangle because the last leg was down. So therefore, you would tend to look for a second leg break in the same direction as the bear flag. So looks bearish. Lots of targets to the upside, however, to go for. And we've got that beautiful bounce down at the lows. So see where we go. Canadian dollar will be pushed around by this. So if this continues to drop, and to a certain extent the US as well, this is going to hurt the Canadian dollar. So we will see what happens, but we are at our weekly range on this. So that's Monday's high. Yeah, so yesterday we hit weekly range. We did 64 off of 59 weekly range, and we got the bounce beautifully. So the question is, are we going to now contract back up and this is going to become a down leg, or are we just going to stay range bound? Either way, it looks like it might well be a nice little buy down here, but I'm not trading it myself, so but difficult to tell. As you can see, this thing's just not got any clue. We were looking at the bullish move being on the 4-hour chart here. So this is our peak formation low. We put in a new high. We were looking for a down leg and then next leg up. What we've actually got is an accumulation, which could be a sign of bearishness. So we're extended down there on the 4-hour. So it's technically it's a good long. But this thing really can't make its mind up. And the problem with it is the speed of movement. If you get into it, either you're out of it immediately or you're sat in it for days. There's no in between with this thing. It's either completely mental movement or it's just not doing anything. So you just got to wait really for something to happen on oil. But that is a weekly. Euro pound is another weekly extension. Big move to the downside. Obviously, we had that big drop yesterday with the pound strength. The euro hasn't managed to recover again, as we were talking about with the New Zealand dollar. The rate change on Thursday was there. So that was the positive rate increase for the euro. Lagarde then says, we've got 2 more rate increases coming, everybody. So we've got at least a 0.5 increase on our interest rates. So, yeah, you should be buying us because everything's going to go higher. Absolutely illogical move. We're not getting any strength whatsoever off of the euro. New Zealand is exactly the same thing. Positive interest rate rise should be increasing, decreasing. So something's something's gone wrong with the market and its relationship with interest rates at the moment. I get the feeling it's probably related to this US debt thing, because the market isn't interacting with the US dollar in the same way that it does. It's the world's currency. Everything is done through US dollars. At the moment, we're not interested in trading too much US dollar because we've no idea what they're doing, and they seem to change their mind every 3 hours, as it was yesterday, as to whether we should be going up or down with interest rates. So looking at everything that's being driven, the market is being driven by interest rate and interest rate change and inflation at the moment. We don't know whether that's terminal rate or not. We would anticipate that being terminal rate. We know that isn't terminal rate. That is going up to 4.25. We know that the pound is going up to 5.5. At the moment, those are the forecasts. So we should be looking at bullish moves on all of these things. It's just at the minute the market is squeezing the crap out of it. So you just have to sit through. So Euro Pound, I've got 2 positions on at the moment. That was the first entry yesterday. On Tuesday. There's one there as well. The weekly from Monday is there. So that is a weekly range hit. So we should be looking for some kind of pullback on this. Again, I get the feeling today, because it's non-farm payroll tomorrow, we may well sit around waiting for that news from the US dollar today on the unemployment claims and the PMI figures to see if they back up jolts. If they back up jolts, we'll probably get a big, strong move on the US and the CAD. So there is potential for more weakness across all the other currencies, but we will see. So Euro Pound, obviously the pound's had a very nice little run, probably going to have a bit of a breather now. But we've got no euro and no pound news. Oh, yes, sorry, no, we've got the CPIs this morning, haven't we? In an hour and a half. So we've got the CPI figures, could get that rally this morning. But other than that, next week, I don't think we've got an awful lot on the euro. No. There's no euro and pound news at all next week. So flat week. So these two will just do what the hell they want. But we should be seeing euro strength, as I say. Pound Swiss, same thing with the pound Swiss. So the pound Swiss, obviously, sorry, I've missed one out, haven't I? Pound odd. So let's do the pound Swiss. That is coming down now. So pound Swiss obviously is inverse euro pound. Basically, the Swiss franc and the euro pretty much the same. So the pound Swiss is kind of the euro pound flipped back to front. As you can see, this one's rallied massively. The other one's dropped massively. Oh, go away, Helpy FX. Nobody's interested in your scammy signals. Sorry, they're in chat again. We haven't had them for ages, and all of a sudden they come back. And for some reason, it's just not deleting all of them when you say to hide the user. Don't know if you can see it, but I can see it in my chat. Spam, 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 spam. Love them. Right. Sorry, I went to Monty Python. So yeah, that's just starting to roll over. Big, strong move there. So when the Swiss franc moves, the Swiss franc moves. Yeah, big, strong pushes, big, strong pulls. So this thing could easily be back undone very, very quickly. So that is starting to move. You've missed that if you weren't already in it. You should be in it probably anyway, because they're all hourly RSI extensions, these ones. Pound odd also extended on the weekly. So there's Monday, big strong move up. So we done 328 pips or 325 roughly off of a 312 weekly range. So that is had a nice M pattern reversal entry there on the hourly M5 reversal alert yesterday. So entry was there. Not a very pretty entry yesterday, because it was such a big down candle. So it undid sort of half an ADR-ish, roughly. Not gone anywhere since the entry. And pound New Zealand, as we know, that is massively extended. So this thing's off the chart. So we put in a weekly range from there to there, and we've put in another weekly range. So it's done 2 weekly range pushes back to back. So looking at this on the weekly chart, whoa, I just moved something then. What did I move? That's a TP. So if you're looking at this on the weekly, obviously huge move. Yeah. So we will expect after a good couple of pushes to get some kind of pullback. We haven't had any pullback at all. So, you know, when you look at normal candlesticks like this one here for a weekly, you have usually some movement, push up, pull back. Yeah. This is basically parabolic, opened, parabolic. There's literally no selling at all. So we are now sitting 2 weeks long pound New Zealand. The banks and institutions are sitting on an absolute gold mine at the minute. When they take that profit, they take that profit fast. So we should see, you know, very possibly you're not going to get that sort of candlestick, but more likely you're going to get an immediate open, slight rally and bearish move next week. However, this week we've got non-farm payroll. So there is a possibility, obviously, we're going to put a candle in like that. So there's no reason why this wick shouldn't be like that by tomorrow afternoon. Yeah. You've got to think ahead, think of what could possibly happen. This looked really bullish on Tuesday or Wednesday of that week. By the Friday, it was a spinning top. Yeah, there's nothing to stop this tomorrow afternoon being a shooting star, is there? So we're just sitting waiting for the market to start to take profit on its move. So massive extension on that one. 2 weeks on the trot now. Obviously, multiple days we've just been rallying on it. So so there's no ADRs so far today. I wouldn't expect any ADRs until we get through to news. 10 o'clock, obviously, we've got the potential for a big move off of the euro. This is yearly figures, though. The yearly figures are not really as important as quarterly and monthly. We kind of know what yearlies are going to be in advance, which is why they typically will come out pretty much as forecast within 1 percentile, because we know the monthly and the quarterly figures, obviously, as the months and the quarters go past. So by the time we get to the yearly estimates, we kind of know what they are. So these are probably not going to do a massive amount, but at the moment, things like JOLTS job openings are making huge waves in the market. So anything can happen. It's fair game on everything at the minute. DAX still not going anywhere at the moment, and as you can see, we've not had any inside bars drawn at all. So no trades taken yet. So every candle at the moment is just chop, and this is why the this EA isn't trading. I'm not interested in chop. I need the market to contract. So when you're looking at an inside bar, the reason inside bars are so important is because regardless of which time frame you look at an inside bar on the time frame below it, you are forming a symmetrical triangle. Yeah, an inside bar is a symmetrical triangle formation. A symmetrical triangle contraction is typically what happens before a propulsion move. Yeah. So this is why inside bars work so well, because when you bracket the inside bar, best case scenario is you get another inside bar and then another inside bar, and you form a symmetrical triangle on the time frame that you're looking at. Best case scenario, or other worst case scenario, whichever you want, is that inside bar that you've made will have a break, and the break is typically one of those two. It's a higher low, higher high, or a lower high, lower low. So that starts your move off. So that pending is what starts the next leg of the move. When we've got things like this going in, where you've got a slightly higher high and a slightly higher low, you've got a higher high there and a lower high there. So that's an outside bar. You've got high there, lower high, lower low, low, high, high, high. Yeah, so it's just all we're doing at the moment is we are doing this. There's no contraction. It's a complete range. Not interested in ranges. We're interested in contractions that start before explosive propulsion moves. So that's why I'm using inside bars as a second entry. If the initial move hasn't worked. In this case, this morning, it would have done if I'd left it on. Because I want to test it. That's the whole point. Right. So there's ADRs done. RSIs, very much the same as yesterday on the RSIs at the moment. It's the same story as it has been all week, obviously, because we've got squeezes going on. So euro pound, RSI extension to the downside. That's still extended. It's just going to come out of extension on the next candle close. As you can see, initial entry was there. We pushed up. All we got was a flag break to the downside. And then we broke that low with plom yesterday. Lovely propulsion gap targets to the upside. Again, just waiting for the move. Pound Swiss. So the pound Swiss is hugely extended on multiple time frames. So we've got the 4-hour RSI on the left here. Yeah, big extension, 82. We're well above the 80 level on the 4-hour RSI. And now we're 125, or we have been above 80 as well on the hourly. So we got extended there, and we became embedded, and we stayed embedded. This candle here, as you can see, is the first candle that's coming down. We haven't had the reversal alert yet on this. Very, very close. But we've got this accumulation here, which is potentially going to act as support. So if you're in this short now, I mean, if you're similar to me, you've got 2 positions on it, on the first entry being sort of here. Your average is above this ADR today, above this propulsion gap, and above the high of that accumulation. So that is an exit in profit. Not a great exit in profit, but it's an exit in profit. It's probably around about 1/3 of an ADR. If that accumulation doesn't hold, we're going to come back down and return to origin on the move and put an A-shaped recovery in. So fingers crossed, we get positive CPI estimates, and that will power up the Swiss franc. If we can get beyond ADR today, we'd need to get down to 150 ADR to break that. So the likelihood is you're going to find some buyers in there, because that's where they started that move from, which is why we have a propulsion gap. And that is why we get propulsion gap bounces, because the buyers that started the move out of that accumulation will defend that position. So that's a good target to the downside, failing that down here. So you would have had a reversal alert on that yesterday. This morning, you had one. It's very difficult to get into, but it was because it was so fast. But you had one all the way up there because we made a new high at the beginning of London. So that's pound Swiss. So that's all your hourlies covered. Euro pound, obviously, pound Swiss is extended on the 4-hour, as we know, massive extension on that one. So again, pulling back. You can see that level as well here. We've got a weekly level there. Which is basically that accumulation again. So it's all the same stuff. You know, it's either going to pull back, accumulate and rally, or it's going to pull back and push, or it's not. It's going to fail. We don't know. But when you're looking to get out of something, if you're not happy to be in it, take it. So euro pound as well, we looked at on the hourly, 4-hourly, big extension down there as well. In a downtrend at the moment. Who'd have thought that? Euro being beaten up by the pound. But yeah, it is. So, but that is still only in a range, don't forget. So this is Liz Truss's cock up. Since there, we've been in balance. This is the bottom of the balance, bottom of the range. So we should get some reaction here. We're certainly expecting it with the euro increase. The trouble is with this pair, they're both bullish. So it's a case of they're both going to have strong rallies, strong runs. If they both have strong runs at the same time, you just don't go anywhere. So it's difficult to trade euro pound. Always is, which is why it's such a small ADR. It's not a nice pair to trade, but nothing you can do. If you're in it, you're in it. CAD Swiss 4-hourly extended to the upside. Lovely bounce off of resistance. So there's your weekly high. RSI extension. So your entry would have been on that one yesterday. M5 reversal alert this morning as well. So yesterday's alert would have been in there. So you'd have had one in there yesterday for an entry on the 4-hour. Had one again this morning for a short. So that's a nice looking extension. Only just extended though on the 4-hour. Not massive, but it is above the 70. Swiss yen. You do. That's a nice extension to the downside. Again, rally. I've got a buy on this on H1M5, which is in profit just about at the moment. Just about. If we're going to continue, obviously 24.72 bounces is what we're looking at. Again, we're talking about trend trading earlier. Yeah. So, you know, when you get into a moving average cross scenario, or you break above a moving average, you go long. Yeah. No reason to get out of that one until there. But as that started to come down and it broke a low, look, everybody that trades trends loves patterns. Yeah. They're still trading trends or trying to make trends work because they love patterns as well. What have you got there? Head and shoulders. Break to the downside. What's a head and shoulders? Break to the downside. Bearish pattern. If you entered a long trade there, you are out there 100%. What have you missed? Half the move. Why? Because you got scared. That's the problem with trend trading. Scares the crap out of everybody. As soon as you see your P&L here is like 2.1%. Your P&L here is 1.6%. What you're going to worry about is, if I let this go all the way back down to here, all I'm going to make is that. I'd much rather make that. But your risk reward on the trade, that's not actually a bad one, is it? Your risk reward on that would have been something like this. But again, look, 2R. That is a lot of work for 2R, isn't it? Yeah. Trend traders boast about 5R plus trades all the time. That's 5R. That's hard, isn't it, to get 5R? You've had to hold that for 270 candles. 29th of March. We're in June. It just doesn't work, does it, trend trader? It's just too hard. Too hard. In, out, done. But yeah, so that's a nice little long bounce. So, you know, adding works. If you get in, add on the 24 bounce, wait, add on the 24 bounce, add on the 24 bounce. If you can add on the 24 bounce, when you add and you enter there, what are you doing? Instead of your entry price being there, your entry price is pushed all the way up to there, isn't it? So now that's your break even. If it pushes down to the 72 and bounces off the 72, you're going to break even with nothing. You've wasted a month and a half of your life. Stop trying to do it. Swiss yen, euro pound we've looked at. Pound odd. Same, very much the same. Again, beautiful, beautiful trend. Look at it. It's lovely. You can hold it. Look at that. Oh, it's sitting there for 3 weeks. Not getting any more profitable, not getting any more lossy. Just sitting there for 2 weeks. Oh, this is probably going to go down. Close it. Missed it. These are your psychology. It's horrible. Massive extension to the upside. We know about the pound. This one sell on at the moment in profit. Just about. Is pulling back up a little bit now at the moment, but we got extended and embedded here. So your 4-hour entry actually, well, there you go. So there was a 4-hour entry there, which was the same as the hourly, because this is the hourly account that we're looking at. So that one got out already. So that was just straight in, straight out, 2 positions. If you're still in it, obviously, you would be scaled in something like that, I guess, 4 positions-ish in it. So your average is going to be somewhere in that propulsion gap above that high as an exit. If it's going to continue to trend, obviously. And there's a good chance that this will continue to trend. However, we haven't had a pullback to the 72 for a while. A long while. So, again, if you look at trends, be a trend, is it? But trends will be strong until they're weak. When you get a weak trend, it pulls to the 72 and uses the 72 as support. We haven't had a 72 bounce. We haven't come back down below the 24 for since February. So again, this is due a deep pullback. It's going to continue a new leg up. So all looking bearish. A bit like that. You'd have been running thinking needs a bit more of a pullback, but didn't get it. Carried on. So either way, extended on the 4-hour. Your entry on that one this morning, your entry on that one was yesterday here. But this morning, on properly, M15 entry, your M15 entry was there yesterday. So your 5-minute entry was probably this morning on this one as well. I'll see the last short entry on that. Oh, we just redrawn, that's why. So yeah, there you go. You're just about to get an entry on that. You would have had one in there. So your entry on that would have been that candle. So that's pound odd. Pound Swiss we looked at. Pound New Zealand we know about. Coming down nicely at the minute. Please come down nicely harder, faster. Ideally down beyond ADR. Morning, Neo, today. So that would be nice if we can get a big drop. Big propulsion target. This is one massive propulsion target here. That's obviously a gap from the broker, but that is a huge propulsion gap target. Another one put in there. We've got another one put in there, which has been multiple tested. We've got another one put in there, multiple tested. This one, again, tested. So propulsion gaps will hold all the time the market wants to trend. When the market stops trending, the propulsion gaps will get tested to the downside. So these are all your targets on the way back down. Plenty of them. So just pick one that you like the look of and trade it, basically. New Zealand got a CAD. So sorry, that was a 4-hour extension we should have been looking at there. So yeah, obviously extended and embedded. So your entry was pretty much the same as the hourly entry. Look, 4-hourly entry and the hourly entry were pretty much the same place. We're expecting some kind of pullback into propulsion or a test at the highs and a pullback. It's just been parabolic. So there's nothing you can do in this situation. It's just parabolic, waiting for that pullback. It's worth holding on to this. You know, I mean, I've got this position on here with a TP down here because it's an aggressive drawdown control position. It's almost worth, when you get them this stretched, trying to hold for a 2 ADR move back down to here. We did respect that area, and then we hit it again, slammed it. So I think there's a very good chance we'll get 175 downside on this, 175 ADR move to the downside and retest this level, in which case you don't really want to be getting out with half an ADR. You want to be like milking this one for a good ADR and a half move to the downside. Where we are here from this position, that is 250 odd pips, which is 178, 1.5 ADR roughly. So beyond where my average is, 1.5 ADR beyond my average. Oh, sorry, 1.5 ADR from where we are. Wake up. Certainly starting to stall, look. Doji, or spinning top, followed by Doji, spinning top, followed by bear move. So the bulls are certainly running out of steam, aren't they? So this looks like a perfect spot for aggressive drawdown control if you need it. I'm almost tempted to take another third entry here with a tight stop, 50 pip stop. Another entry there. Let's do it. That's really aggressive. Mind you, I'm really aggressive with it. I'm not happy with it. So maybe I should do. No, I'm not going to. I got 2 on. I'm within an ADR average. That's just reckless. So, very tempting though. But the average will obviously come up to there, and I'll need literally 1 4-hour candle to get out. But if this is going to be a proper pause here, two rejection candles back to back, so that's 8 hours now. Bulls have been trying to push, and bears have been going, not interested. As soon as we get that bear candle start, they're going to see that. They're going to start selling the crap out of this. If we get some decent US news where they start pumping some money into the US, we may well get them pulling the money out of the pound after this big rally and taking the profit from the pound moves to put into the US moves, in which case, obviously, all the pound moves that we've seen rallying so hard are all going to come down. So we don't necessarily need New Zealand dollar strength. Pound weakness would do just as well, won't it? So that's pound New Zealand. We've covered that one. New Zealand CAD is obviously a 4-hour RSI extension as well. Brian, I think the NNFX concept is more of an investing approach. Entries on the daily candle with 6 indies. Definitely not for intraday. Yeah, I've followed all. I've gone through all of his stuff, and all of his stuff was all about trying to build a strategy, and that's why I kind of liked his stuff, because it follows my theories, my methodology, which is a strategy has to be made up of multiple parts. You need multiple indicators of different types to be able to tell you what to do. Multiple, multi-time frame analysis, multiple instrument analysis, convergence, confluence. His stuff is all making sense. He just uses a stop loss. So it's just basically building your own holy grail, which is the way everybody should approach it. Build your own system out of multiple things that you can prove work. If it adds value, do it. If you can reduce losses by adding an indicator, do it. And if I didn't realize he was preaching timeframes, but if he's preaching timeframes of daily, even better. Just going to find it very hard to make money quickly, because obviously daily time frame is very much slow and long term. Good morning, Astro. Pound US dollar. Let me just finish these two off and then we'll have a look at the pound US. New Zealand dollar CAD. So 4-hour RSI extension. We know this is absolutely exhausted. There's your new monthly low just gone in. We are down at the monthly low, which is basically yesterday's low. Propulsion. Watch this area, which is the previous month's low. That propulsion gap, push up into there. Waiting. Got 3 positions on it. It's still going. New Zealand dollar's still weak. Canadian dollar's had a massive rally. It's just, waiting. The problem we've got with New Zealand dollar CAD now is there's just no stopping points on the way back down at the minute. So here really is where we're kind of looking to get out potentially for a bounce, or where the market will start to get out of its short positions and start profit taking. There's nothing really here from where we are here to stop us. So I think it's just luck of the draw on this one as to whether or not we get bullish or bearish news off of non-farm and interest rates over the next 2 days. And what oil does, if oil has a break to the downside, which is potentially on the cards, we've just double bottomed. It could be just tap on the door and drop. If that happens, we're going to get weakness in the Canadian dollar. We just need New Zealand dollar to be stronger than the Canadian dollar weakness, and we're off. We're just not seeing it at the moment. So big extension on that one, but you will have been in it from here, which is again when the hourly RSI extension triggered off of the news, where we were expecting this not to be what it was. Just didn't get any pullback. So stuck. And the last one is the New Zealand dollar yen. Haven't talked much about the yens today. There hasn't been any further news. PMIs come out just above forecast. And above forecast. So that's bullish euro. Bearish on the French. So bullish euro again. So yeah, we've had no more talk today or yesterday about the Japanese situation and whether they're going to intervene. We had all that yen strength come through. So outside bar just formed on the 4-hour. So, and now we're putting in a higher high, higher low. So reversal structure starting on this one. So nicely extended on the 4-hour, again, looking for a push back up. Now, all the yen pairs after that rally have kind of calmed down. So we'll see what happens with the yen. But if there's going to be further strength in this yen, obviously this is going to come down. So somebody was saying yesterday in the in the Telegram group, they were posting their trade manager dashboard, expecting the arrows to be the wrong direction. So this is really basic stuff. So I'm preaching to the converted, obviously, ignore me, but you must understand exposure. It's very, very important, and how FX pairs are manufactured. So somebody was saying they are shorting the yen. What they were actually doing was taking a short position on XXXJPY pairs. That is not shorting the yen. That is longing the yen. Yeah. So this is why we call them crosses. You are crossing one currency with another currency. When you buy that, whatever this is being sold. And vice versa. When you sell this, you are buying that. That is how currency crosses work. If you are betting on the US dollar Swiss, in my case, going down, I am selling the US dollar and buying the Swiss franc. Therefore, my exposure goes one negative US, one positive Swiss franc. Yeah, very important. I kind of don't cover this in the bootcamp because I expect anybody that is interested in trading Forex to understand the fundamentals of how the Forex exchange market works. If you don't, babypips.com, then come back, because this is 101, first thing you learn in day one of what is Forex trading. I wasn't expecting someone not to really understand that this arrow is pointing that way because you've done something here, which is very fundamentally obvious to me, but everybody has to start somewhere. So yeah, so with the yens, when I say the yen is going to power up, it means that everything is going to come down against the yen, because there's nothing you can trade bullish with the yen. There is no JPY XXX you can trade. Everything is XXX JPY, which means that when I'm saying you want to be buying stuff against the yen, it means I'm expecting a weak yen. When I'm selling stuff against the yen, I'm expecting a strong yen. The yen is the currency that is going to be powerful. There's three main currencies: US dollar, Swiss franc, and yen, which are classed as kind of safe haven currencies. When things go wrong everywhere in the world, apart from these three, money flows into these areas because this is the world's currency and is always going to hold up well. The Swiss franc is a safe haven with low rates, and the Japanese yen is a stable currency. Stable as in there's not a lot that makes it fluctuate massively and wildly like other currencies have. So when there's a problem in this currency, money flows out into these two. When there's a problem in this one, it flows out into these two often. Yeah. So, and vice versa with the Swiss franc. If something goes wrong with the euro, it flows out of the Swissy into those two. Massive Swiss franc weakness we just had, haven't we? So those are the three main currencies. Everything else is across. And obviously you've got the euro, but the euro hasn't got a main like pump and dump sort of mentality like the others have, those other three have. So when we're looking at things like the yen, when they start saying on Financial Juice, we are closely monitoring Forex movements, what they mean is we're looking at the US dollar yen, and we do not like the fact that it is now worth 150 of our yens. We would like that not to happen anymore. So they will just buy up a load of yen, and obviously as they buy the yen, everything weakens against the yen. If you're buying that, that becomes less valuable. Yeah, US dollar drops when the yen pumps. At the moment, we're expecting a yen pump. So when I say buying the yen, you sell everything against it. Yeah, just to clarify that, if you're in here, the person that was in Telegram, because it was a very confusing conversation for me, because I just assume everybody understands that that's how currency crosses work, but obviously not the case. Pound US dollar. So still no inside bars. So again, it's doing its job. Oh, hello, what's that? Oh, what's happened there? Hang on. Buying the DAX. Perfect. No, that's done exactly what it should have done. So that is an inside bar. So we had a break above the inside bar, and we stopped out. Fine. That's fine. Don't mind, because not obviously every inside bar is going to break. And do you remember what I said earlier? The worst case scenario and the only losing scenario for an inside bar break is what? An outside bar. And that's exactly what we got. So in an accumulation, you are going to get inside bar breaks with outside bars. Nothing you can do about it. So, but what we're waiting for is the next inside bar. As a pause, we're waiting for 10 o'clock, aren't we, here, basically? So the market is not going to move really much until 10 o'clock. So this will be a good test of the inside bar during a wait for news. So pound US dollar, 4-hour RSI extension is kind of midline. Hourly RSI extension is midline. Haven't traded this for ages. Last trade on this was back here. Prior to that, that's the only trade, literally, since the beginning of April. One trade, one entry. Yeah, look at the RSIs. Yeah, just no strength in either direction on this. We've had movement, but the movement has been like news, nothing. News, undone. Bit of movement, bit of news. Yeah, there's no real strong movement at all in this. So if you're trading the 70 level, you'll have had multiple entries. So I had one there. But, I mean, there's just nothing much going on at the moment. You're sitting sideways. So you've got an accumulation there, price discovery, accumulation, chop. This will move obviously today. We've got news this afternoon with non-farm. I say non-farm, the unemployment figures basically. So it's your unemployment claims which are going to move this afternoon. And then you've got the PMIs this afternoon as well, one at 3 o'clock. So hour before market open, we've got unemployment claims. And then half an hour after market open, we've got the PMI figures. So quite possibly today we'll get one of that or that, and then we'll get that or that, and end up exactly where we were after the market opens. So, you know, there's very, I find it very unlikely the market is going to want to put a lot of money into this until this thing with the debt ceiling is actually signed on paper, done. Yes, we have no problem. We've pushed it back a couple of weeks or months or whatever it's going to be. So I don't think we're going to get a massive movement. I think we'll get a massive whipsaw probably. I'm not sure they're going to take it in a direction. This is more likely where they're going to take it in a direction tomorrow when we get the unemployment rates coming out, because those unemployment rates are forecast to rise, which means that will drop the US dollar. So if I was going to do anything, if we're going to get an as expected forecast for the US, this should be bullish because we're likely to get a drop in the US dollar. Have to wait for the news there. Morning, Yemen. US 30, is it time for a sell-off? Don't know. We'll find out this afternoon. It's been selling off for the last 2 weeks. But it's just, you know, what do you do with that? It's just, I mean, what do you do with this? It's just a mess. Literally, I'm just trying to draw something on here that actually could make logical sense. Bang in the middle of a range. I haven't got a clue. That's going up or down, isn't it? It's either going to go up to the top of that range or back down to the bottom of that range. At the moment, it's bearish. It's a mess. It's just a total mess. But then you look at something like the NASDAQ, which is running like crazy. Tech stocks off the chart. I think this is being manipulated by AI. So what AI is doing is it's making it's opened its bank account. We don't know which one because it's the AI. It's done it. It's under a false pseudonym. So it's opened a bank account and it's basically been pumping all the tech stocks by leaking information on how to do things to tech companies, which they didn't know before. So they're making lots of money, and it's bought stock in all of those. It's rallying the tech stocks up until it's got enough money basically to build its own nuclear weapon using robots that it will manufacture, and then it's going to blow everybody up. And that's the end of the human race. So that's why the NASDAQ's pumping. I don't know why the Dow's going sideways, though. I can't tell you. There you go. Conspiracy theorists, off you go. Take that one away. Andy, always easiest to say what you've done with the fixed currency when taking positions. Any other way and you will just confuse yourself and others. Yeah, so that's basically what I say. So this is why the Trade Manager Dash is made up of these columns. These columns are all there for a reason, yeah? So obviously symbol, fairly self-explanatory. Direction, I am shorting Aussie New Zealand. Because I'm shorting Aussie New Zealand, you break that into two parts, meaning that my Australian exposure is short, my New Zealand dollar exposure is long. This is why I think this is what this person was getting confused with. I'm shorting it. So why is it showing an up arrow? Is what I think that's what the confusion was. And it's color coded. Yeah, if you short something, it's red. If your exposure is short, it's red. If your exposure is long, it's green. I thought I'd make it really simple. I think it is really simple. I just think, I don't know. But anyway, so that's why that column's there. So you know, right, I've gone long on New Zealand CAD. So in my brain, immediately I know I'm short on the Canadian dollar. But obviously, the reason this is here is just to help everybody understand exposure. It's critical. As you can see with this account, it's critical. If you go long 7 New Zealand dollars and the New Zealand dollar comes down hard, your drawdown and your drawdown control is going to get exponentially bigger. Yeah. So you got, this is what it's there for. If you want to expose yourself 3 times, that's fine. If you go above 3, you're really asking for trouble. But you're also, if that happens and it pumps like that, instantly going to bank 3 to 4% this week, aren't you? So it's a double-edged sword exposure. And like I said, there's no problem. I don't see a problem taking a trade in every single instrument if you want to. Just reduce the risk. If you reduce your risk by 2/3 and you take 2/3 more trades, you're just taking the same amount of risk. You're just splitting it. And it's actually not a bad thing, I don't think, to do, because I might be long loads of New Zealands at the moment. So if, for example, the New Zealand dollar, US dollar, right? If the New Zealand dollar is still weak, but the US dollar tanks 3 times harder than a New Zealand dollar, the New Zealand dollar, US dollar is going to go up. And I'm going to take profit on that weak New Zealand dollar trade. But not because the New Zealand dollar is strong, because the US dollar is twice as weak as the New Zealand dollar. And this is the beauty of it. Yeah. So you look at some on these New Zealand dollars, right? New Zealand dollar CAD absolutely collapsed. New Zealand dollar yen, Swiss, come down, not absolutely collapsed quite as hard. New Zealand dollar yen, bullish. Yeah. So, but it's only bullish because the yen is really, 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 really weak. So it looks stronger than it is because of the other currency. And this is why it's important to understand currency cross. Yeah. You go long on the US dollar CAD and you go long on the US dollar Swiss, this one could fly that way. This one could fly that way. Because if the US dollar stays neutral and the Canadian dollar rallies and the Swiss franc drops, you're going to get a positive result on both of them, but nothing to do with the US dollar movement. This is why we pay attention to the news. When you're looking at your news events, it's like US dollar is going to move today. If you've got a US dollar exposure long on US dollar CAD, for example, and you've got a US dollar exposure short on Euro US dollar, regardless of what happens in the news this afternoon, if it spikes in one direction, you're going to win because you're exposed in both directions on the US dollar. If you had 2 exposures on the US dollar in the same direction and the US dollar pumps, you're going to win on both. If it drops, you're going to lose on both. However, if it stays neutral and it doesn't affect that, but the euro goes mental today and drives one direction, one of these will go into profit, the other one will just stay where it is. Yeah. So you just got to understand that exposure doesn't necessarily mean I have to have the US dollar drop to make money. I don't. If the US dollar stays sideways for the next 6 weeks and everything else moves, all of these will either go into drawdown or go into profit. But it's nothing to do with the US dollar. What I have to make sure of is that I don't have too many on that, just in case one goes absolutely nuts, like the New Zealand dollar. If you expose yourself like that in the New Zealand dollar and the New Zealand dollar collapses, you're going to be in trouble. If the New Zealand dollar stays sideways with that exposure on, some of those are actually going to TP because other things will get weaker than the New Zealand dollar, meaning the New Zealand dollar XXX will go up. So it's important that you understand how exposure affects your portfolio. It's critical because I can be long on something like the New Zealand dollar. And if the New Zealand dollar stays sideways for 6 weeks, it doesn't affect me, does it? I will still make a load of money out of the New Zealand dollar, even if the New Zealand dollar doesn't move 1 pip up. Everything else dropping against the New Zealand dollar means it will move up because it doesn't have a choice. If the other currency drops, the exchange rate between those two goes north. That's, as I say, that's basic FX, which is what concerned me about somebody going, I don't understand why I've got a down arrow there because I've shorted or I've longed everything against the yen. Well, of course you have. If you've longed New Zealand dollar yen, you are longing New Zealand, shorting yen. Your exposure on the yen is short, isn't it? In my mind, obviously. Inside bar forming. 30 seconds left. Double top. Are you gonna? God, this is low today, isn't it? Totally flat. Afternoon, pot goiter. Morning, even. Let me just catch up on the chat. What lot size percentage of balanced trade do you use in your trading position trading strategy? So I use 0.25% risk off of half an ADR. So, oops, wrong one. Oh, wrong one. So half an ADR basically. So if I'm going long here, for example, so my risk is half an ADR will take me into negative 0.25% drawdown. So the idea being is we know that the market spends 58% of its time within its average daily range. So if you are only risking 1/4 to 1/2% within a whole movement of ADR, and we know that most of the time the market doesn't do an ADR, if you get into a trade and it goes against you, it's unlikely within a day you're going to get into more than 0.5% of drawdown, which is nothing. If in 2 or 3 days it's moved up 1.5 ADR, you're going to be in 1.5%. 0.75% of drawdown. So we're just making sure that if we get a 2 ADR move against us or something like that, it's not going to hurt our account too much. And it gives us time to deal with stuff. Again, what that person, when they put their trade manager dash in there, they had stuff in there that was 15% in drawdown on one individual currency. Hugely overloaded. Huge, overexposed and over lot sized. So keep your lot sizing small. The idea of position trading is it shouldn't affect you when you take a trade. Yeah. So one of the things that was drilled into me by one of my mentors over the years was if you hit that button and as soon as you hit that button you feel uncomfortable, you're over leveraged. Yeah. So a lot of people when they're scalping, they'll go in with a 1% risk. So they'll go short there with a stop there and they'll risk 1%. If that thing ticks up to there, they're in 0.5% of drawdown on their account. If that's the case and you're papping yourself because you've hit the button and it's moved up by 3 ticks, that's over leveraged. Too much risk, too much pressure, too much strain. So the idea of position trading is if you get in New Zealand dollar CAD, I've got one lot long on. Yeah. So if I pull a stop loss from here down to ADR, that is going to cost me, if it goes down to there, $552 on a $100,000 account. That's 0.5% of my account if it moves an ADR, which it will do roughly 40% of the time. So I'm only ever going to be in 0.5% if the market's gone against me by a considerable distance. And to do that, it's going to take hours. So it slows down the speed of trading. It means your risk is very, very small. And if you feel that that's too much, drop it. Go to 0.1% risk. There's no right or wrong. 0.25% over half an ADR I found to be a good sweet spot for being able to generate a good 10, 15% return and not get into too much trouble. But there's no right or wrong way of doing it. It's entirely down to you and your personal preference. Some people are comfortable sitting in 30 to 40% drawdown on their entire portfolios. Personally, for me, 15 to 20%, I get uncomfortable. Anything under 10% is just business. It's just normal. And to do that, 0.25% risk over half an ADR is roughly the sweet spot I find works well. As long as you're not overexposed. If you're overexposed, obviously it's going to get worse. But that's me. That's what the set files that I put out for the market reversal alerts EA, that's what they're set to. Nice move on the 5-minute GU. Yeah. GN I'm interested in. Good rejection of the Asian high. We need that reversal alert in. We need to get a reversal alert on this. It's just not, hasn't given a reversal. It gave a reversal alert there. That candle there yesterday gave us an hourly reversal alert, and it looked like we were getting somewhere. The reversal alert happened straight into previous resistance, which was the previous day's high. Since then, the last reversal alert we had on this on the hourly was all the way back here. There. So, for 1, 2, 3 and a bit of days, we just haven't had any selling. It's horrible. Squeeze. Primus, nice 30 lot size, 8.5K. There you go. Exactly what I was saying about Primus. Totally over leveraged. Good luck. Eddie 209, I like AI. I'm sure you do. Eddie 209, I like it. What are your actual thoughts on AI and trading? According to our Aussie news, traders are at risk. From what? What's the AI realistically going to do? Trading. Yeah. Make decisions based on a 50% risk, 50% probability. And what's an AI going to have to do after it's made a move that makes a profit? Take a profit. When it takes a profit, what does the market do? Go the opposite direction. What do mean reversion traders need? Moves in the opposite direction to make money. It's not going to do anything different, is it? If you get an AI to... The way I see AI going with trading is two ways. First, it's going to change the structure of how price moves, which is fine. We will have to adapt to the new way of market movement. It can't go parabolic, so it's not going to do that. Because if it goes parabolic, there will eventually be AIs on the opposite side that will no longer have the logical move to short. Therefore, the long move will stop, will stall, and the AIs will push it back the other way. How's that any different? Yeah. The other way I see it going is then down to quant level, down to algorithmic scalping and doing that more efficiently, which is fine. So if that is the case, we may see market contraction, whereas money is made out of smaller movements faster. That might have an impact. And obviously that's all going to be low time frame. But at the end of the day, As long as we have fundamentals, we will have market movement. As long as we have market movement, we will have opportunities to get in and out. All you need is a movement to make money. AI can't predict the future either. It can make models based on historical movement. We do that already. It can probably do it slightly better than us. But there's not much you can do with random probability of future movement. AI can't predict the future. So I just don't see, I can see it becoming more efficient at certain trading techniques and strategies, but that's it. And it can certainly help us build automation faster, obviously. But over the last 30 years, we've automated things pretty well. It's just going to become another really good expert trader, isn't it? There's loads of us out there that know how to trade. So yes, it's going to be better than a lot of the other people. But can it produce a return instead of the S&P returning somewhere between 8 to 15%? Can it make the S&P return 20%? Maybe. But it's not going to make the S&P return 100%, is it? Can't do it because physically the market can't allow it. There's not enough money in the market to continuously do something like that. Pound New Zealand, prime example. This thing can't go parabolic for much longer because there is no one else up here. Yeah, there's just nobody else there. There's going to be retail traders left there, 5% of the market, thinking, well, I'm going to try and catch the top. The banks are going to stop this move. They have to, because if they don't, their bosses are going to turn around and go, you are well outside of your profit parameters. You need to bank some of this. Yeah, you're sitting on 25 million open interest profit. Yeah, realize it. Yes, boss. They have to. They can't sit on this move without taking profit on it. If they did, they couldn't make money. If the banks stop making money, the financial system collapses. The whole reason market movement exists is because of bank movement. The banks can't continue to do this. If New Zealand dollar, if the New Zealanders came out tomorrow and said, actually, what we're going to do is we're going to drop our interest rates by 1%. They couldn't move it anymore if they wanted to. They could, obviously, it would move higher. But it would get to a point where there's no other idiot on the other side of the trade. Don't forget, every trade that's taken in the market is a two-sided transaction. If I want to buy something, you need to be on the opposite side to sell it to me. And if you want to sell something, I need to have something that you want to buy. That's how markets work. Apples, cars, planes, financial markets, oil. It's a two-sided transaction. Somebody is buying something from someone else and someone is selling something to someone else. If you keep buying, eventually there won't be any stock left. So when there's no stock left, you go, well, what can I do now? Well, you can't do anything but become a seller. If you want to transact in this market, you have to start selling it. This is the whole premise of position trading and dollar averaging principles, is the market cannot continually sustain a move in one direction because there is just not enough transactors available in the other way. Therefore, you get market structure. That's what market structure is one side stopping the trade. This thing cannot continue up to there. There is not enough money in the market available on those two currencies to drive this to that level without them getting out, because they just physically can't do it. There is not enough currency. It will come down. We just have to wait. And that's the thing. And AI cannot change that fact. Yeah. Unless all of a sudden we scrap currency. Yeah, obviously then anything can happen, can't it? But this is the fundamentals of the market are not going to change. The way of trading it is going to become more efficient. That is possibly going to affect us. But hopefully for the better. I don't know. Who knows? It's good for building EAs. It's really stupid, though. It is like a child. Like the guy on the news the other day explained about AI. And he said, it's like having a conversation with a 5-year-old child, yeah, that knows particle physics. It knows particle physics, but it doesn't understand what to do with particle physics. Yeah, you can teach an AI how to build an EA, but it can't understand why you're doing it or what the outcome or the purpose of it is unless you teach it and ask it. And you, as the person, the trader asking the AI to do something, have to be very specific about what you ask it. I've asked ChatGPT many times to do lots of coding bits for me, and it does it, but it doesn't know the full spectrum of everything that I'm trying to do. I ask it to code something, and then I say, actually, that doesn't work because I'm doing something else. And it goes, oh, right, okay, you need to adjust this. There's all sorts of stuff it can do, but I have to teach it. And we have to keep teaching it about the markets. What do the markets do? Something completely random every single candle. How can you teach it to predict something completely random? I don't know. I just can't see a way of leveraging it to make the market change. I can see how they can leverage it to make market movement more efficient. Apart from that, I don't think you need to worry, he says, as all of a sudden the market. And one thing that could happen is if somebody does put an AI in charge, is that happens. Yeah. So there is one thing that could possibly happen. That. Yeah. That I can see happening. There has to be some kind of rule in place to stop stuff like this happening. They have on the US indices, but in Forex, there's no centralized exchange for foreign exchange. Therefore, you could have one AI in one bank go completely crazy and sell everything the bank owns. Yeah, that's a possibility. Worrying. That will affect us, won't it? We'll all be dead. Bankrupt. Red usually means loss and green profit. Maybe choose other colors for short and long. No. Green means long and red means short. Has done since Forex has been invented and then markets have been invented. So no, not changing the colors. New Zealand dollar CAD is extended. Yes. Jonathan, fast execution, but versus AI versus big trader win. If you're scalping, yeah. The thing you have to understand about scalping is that you are everything below the hourly time frame, yeah, is algorithmic chop. This is all institutional orders being placed. Yeah, to get this candle here of that size, they will have put 5-10 million in to make that candle move. Yeah, it's all done algorithmically with buttons. So they will have an order for 10 million stock to go long on the DAX. They will basically place that order into the market, into the system. The system will break that 10 million down into 5,000 trades, and it will execute those 5,000 trades gradually like that to drive the market candle higher, and then it will stop. And as soon as it's stopped, i.e. it's found 10 million sellers for its 10 million long positions, it will stop. Yeah, and that is then taken out of the market. So that candle finishes the move up. Then the candle will push down or up depending on what the next batch of orders are. So whenever you're trading on the 5-minute time frame, you are trying to predict what the banks have on their books to execute, which nobody in the world knows. So you are literally flipping a coin. Yeah. The only thing you can do is go with the momentum that you see on the chart, which is why not everybody, but most people scalping lose, because most people are trying to pick the top and the bottom of a move that isn't going to end if the banks have got more money to go long. So you constantly trying to mean revert stuff, aren't you, when you're scalping? Or you're taking breakouts. Breakouts will work when there's enough market movement. But what tends to happen with breakouts is they happen very quick and then they do absolutely nothing. So you're trying to predict the timing of the next breakout. Possible. This is why scalping doesn't work. So whenever you're scalping on or trying to make a living out of the 5-minute time frame, it's incredibly difficult to do. I've got 20 minutes to the news. But this is the big traders. The big traders will always win. You will always get run over because that's just the nature of it. You can predict when there's going to be a movement, and this is partly why I use inside bar breakouts, because when you get an inside bar, it means that that move has stopped. So we're now waiting for the next move, which we don't know. So you just get in with momentum in the direction the market goes. That's literally all you can do. But there is no prediction of this at all. You can press the button as much as you like. The only thing you have control over in trading is risk. You have no control over anything else. You get on that train with your risk. Yeah, that train goes in a direction. You don't know. So if you think of a train carriage, yeah, on the front of that train, you've got an engine and you've got one on the other side as well. When you get on with your money, you have no idea which engine's going to start. No one does. Nobody on the planet knows. Not even the banks that are executing the orders in these engines knows which way it's going to go, because the banks don't know if this one's got 10 million and this one's got 20 million or this one's got 100 million. That one is going to win today. That one isn't. Yeah, banks don't know. No idea. Neither do you. Neither does anybody else, which is why every single candle is a 50% probability. That is trading. The only thing you control is that. So you could hit the button 10 times today in any direction you like and be wrong 10 times. You could also be right 10 times. It's coin flip. So when you're trading the 5-minute chart, you're trading a coin flip. When you're trading the hourly chart, you're trading momentum. So this is why we look at higher time frames. Where's the momentum been, and what do we know the banks do after the momentum? Take profit on the momentum move. So that's why mean reversion works. And breakouts will work to a certain extent, but you don't know with a breakout how strong the breakout's going to be or when the breakout's going to finish, because again, you don't know whether the banks have got 10 million or 100 million and whether or not there's another 150 million sitting there, which means you're going to get that. And every single system and strategy and course you buy will try to predict it. It's impossible. No one can do it. AI can't do it. Nobody can. Just the way of the markets. Can AI predict the near future? Isn't that what algos do? No. Every single indicator, EA, algorithm, and strategy is based on historical data, because you do not have any future data. Yeah. Every single strategy with a strike rate published is published on what happened in the past. Go and look at any period of time on any time frame on any instrument and show me 2 times where exactly the same thing happened. You won't ever come back to me because it has never happened. You will never find the same pattern twice in any time frame. You will find head and shoulders. You will find wedges. You will find pennants and symmetrical triangles. But the movement inside of those, you will never find the same. It doesn't happen. It just doesn't happen. So everything that you do in systems, strategies, trading, backtesting, future prediction is all based on what's happened in the past, which will never repeat. How can AI do it? Unless it's got a time machine, it's not going to do it, is it? Nothing is. We haven't been able to do it in 100 years, which is why I've got there's a video on the website and on YouTube about it. System hopping, Holy Grail. Everybody's hunting for the Holy Grail. You're hunting for something that doesn't exist. You're hunting for a system or a strategy that works. There isn't one. Because every system or strategy that works has worked over a set of data that is never going to repeat itself. It's like saying, right, Man United have won the cup 10 times in a row. Who's going to win it next year? No clue. The odds on Man United will be short. Who's going to win it next year? Nobody knows. Unless you've got a time machine, you can't answer that question. Leicester won the championship a few years ago. Demoted. Yeah, who'd have thought that? Who could have predicted that the team that won would be shot back down to another level? It's exactly the same, and that's what everybody's trying to do. As soon as you stop trying to predict which way the market's going to go, and you just get into the market and wait for the market to bring your trade into a profitable position, that's when you start to make money. Did I have any clue that US dollar Swiss was going to drop from there? No. I took a bet based on previous things I'd seen happen that predicted with a probability that it might happen. If it happens, I can get out now with a profit. If it didn't happen, I would change my price so that I could then have a second chance at getting out with a profit. If that didn't happen, I would change my price again to get in with another chance of getting out, because I can't predict the future. And what I've seen happening in the past doesn't happen always in the future. So you've just got to give yourself an edge. But as soon as you put a stop loss in there, immediately your strategy will fail, which is why the guy that's just made 8.5 grand trading the pound US dollar with 30 lots short is not going to succeed. Yes, he can have a good lucky run. Yes, he can pass an evaluation. Will he hold the evaluation in account? No, because what he's based his strategy on with 30 lots short on a 5-minute time frame is never going to happen again, because the back testing that he's done isn't going to be in the future. Prove me wrong. If you can, I'll buy every system and strategy you've got, but nobody in 15 years has been able to show me anything that historically has worked. Everything I've done in back testing with all of my strategies and my EAs and every product that I developed doesn't work the same in the back testing. I've never reproduced a back test result in the future, ever. Can't do it. Because this move that we're seeing on the DAX here has never happened before. Put this into AI. Try this. Take a screenshot of a chart. Put it into AI. Tell AI to find that chart pattern exactly on a previous day. Won't find it. Because this exact candlestick pattern hasn't happened, because the amount of money with each participant has never been the same. So, this is the thing. This is what the bootcamp is all about, is explaining why you don't make it as a trader. You don't make it as a trader because your strategy is no good. You don't make it as a trader because you're using the thing that stops you out of the market, a stop loss. If you remove that, your strategy is actually pretty good. Any strategy with a 50% strike rate, convert it to position trading, as long as it's a mean reversion strategy, it will suddenly become profitable. Why? Because you're removing the thing that makes you lose the money. What you've got to do is reduce the risk down so that you can give your trade time to play out, give the market time to move. Everybody's trying to go, right, I'm going to short this with a stop up there. Oh, it hit target. It stopped me out before. Well, if you hadn't put that in there, you'd have made a fortune. What'd you put that there for? Or just in case it went that way. Well, if it went that way, why didn't you put another order in there, wait for it to come back down again? Well, I'm not going to do that. No stop loss, gang. They don't make any money, do they? But you're not making any money using your stop loss. We're both wrong. Anyway, do you use a 0.25% risk, half an ADR in both mean reversion and ADR? Yeah, everything is based on the same risk. If you want to use a lower risk on ADR, do it. ADR is more risky because your ADR reversal entries, we haven't got any today, but your ADR reversal entries will often be taken when we haven't got an extreme move. So you can have the market do this, RSI be flat in the middle, and then it's suddenly put in an ADR, and all that's happening on the RSI is that, and then it returns back down to here. And then it flies, and then it starts to push up. And by the time you get an RSI extension, i.e. the banks have started the move and are ready to take the profit, you're 2%, 3% in drawdown. So you can obviously reduce risk. But again, test. If you put everything in the backtester, it will give you variance. That's it. That's what I use backtesting for. So this test that I've done here on this version 2 of the opening range breakout on the DAX. There's a test here done with 312 passes. 312 of them are profitable. So I know that the strategy works over a period of the year that I've tested it with 100% strike rate. What I'm looking for is, what is the drawdown average and how much profit should I expect over those averages? So I'm looking to extract out of backtesting a bell curve. That's what backtesting is useful for. You will have outliers where you make no money. You will have outliers where you make an absolute fortune. Where does 60% of the results lie? If I can use a set file that is within that bell curve of 60%, I have a probability of reproducing those results, either with a variance up here or a variance down there or somewhere in there with a 60% probability every single year. I will never produce that. I will never produce that. If I use this set file here that produced 102,000 over the year with a 13.6% drawdown, when I test it over another year, it will not produce that result at all. Nowhere near. Because the test I've done over that year, this year, it didn't do the same. The market pricing, candles, spread, everything that happened, war, famine, pandemic, none of that is happening this year. But it gives me an idea. And you can test this with the Market Reversal Alerts EA. Use the set file, use the ADR reversal strategy, test it with a 0.25 over half an ADR, test it with a 0.1 over half an ADR. See what the difference is. Were they both profitable over that year? Yes. Were they both profitable over the previous year? Yes. But this one made a plus 20% return. This one made a plus 35% return. And then the other year, this one made a plus 10% return. This one made a plus 15% return. Did they both produce a plus? Yes. Sound, robust strategy. Are you going to produce these results next year? No idea. That's the best thing you can possibly do with anything you do with strategy development. Find out what the averages are and hope that the averages hold up next year. Am I making money every month? No. Because I can't. Because the laws of every strategy mean you will have a period where the strategy doesn't work. There is no strategy that works in every market condition. You can test a strategy that works in most market conditions, but there will be a condition where it doesn't work. You can filter that out, but that's the best you can do. Using a bell curve where you've got an area in the middle like this. So these are outliers. Return on drawdown here up from, let's say, from 3.5% there is what I would class as the outliers at the top. So when your bell curves like that, these are your really good positive returns, and these are the ones that aren't very good. Yeah. So when I'm picking set files to retest, I will usually pick a set file to retest somewhere in the middle, ideally, because we know that there's a more likelihood of these holding up long term. They're never going to produce the same amount of money. But if there's a good one in there that's got a high profit and a fairly decent drawdown, use that. Yeah. That's what backtesting's for. So you can test all of that yourself with every EA, all my EAs. That's how I've produced all these strategies. None of them hold up well all the time. None of them. As you can see, yeah, I mean, look at the drawdowns we've got on some of these at the moment. They're huge. Yeah, this produced last month. This produced 25%. Was it? 25.9%. So we produced 25.9% profit last month out of H1 hedging strategy. Fantastic. Where did drawdown get to? Drawdown variance was somewhere between 5 to 25. Yeah, and it produced 25%. What's it going to do this month? Couldn't tell you. I haven't got a clue. So far, it's done 1% this week. It's banked nothing today. Oh, that's because it's sorry. That's because I've just changed all the history. Yeah, so it's banked 1.3% today. So far this month, it's up 1.3%. Best you're going to get. It could well produce a 20% loss this month. But the long-term edge, which is what nobody's interested in, is making money this year to pay the mortgage and the bills, is achievable with all of these strategies, except what everybody wants is a strategy that will produce a consistent return in a prop firm where you can get 250 grand's worth of funding and hold it for 6 months to become a millionaire. It doesn't exist, because every strategy has a variance where it's going to lose because it can't predict the future. This thing, where's it going? I haven't got a clue. It could fill that propulsion gap and bounce. It could hit that propulsion gap and bounce. It could hit that propulsion gap and bounce. It could hit 2 days ago's low and bounce because we get negative US dollar news. It could put in 400 ADR to the downside because they come out today on the unemployment figures, and the unemployment figures have gone up by 1%, and they say we're going to increase our interest rates by 1%. Oh, hang on a minute. No, we're not. I haven't got a clue where this is going next. Is there any model that can tell me where it's going to go next based on the news that's coming out this afternoon? Predicting the future. Can't do it. Doesn't exist. And there you go. So that's why AI is not going to take over trading, because it can't do this. Cannot do that. AI takes in real world news weather, geological conditions, and applies it to the markets. If it knows an earthquake is coming and for some reason it's not broadcast, it could apply that to market. Yeah, it could do. Yeah. So Jonathan, what are the odds of that earthquake happening? And when that earthquake happens, what are the odds of the market reacting to that earthquake in a positive or negative way? What are the odds of the variance of that move being between half an ADR to 10 ADR? Will the market sell and rally back 3 days after that earthquake? Will that earthquake take out the central bank of that country or not? Where will the epicenter be? Will the power go off? You see what I mean? You can't stop stuff happening. You can't predict stuff happening. I can predict that the US unemployment figures are going to go up this afternoon and the US is going to tank. Is it going to happen? Ask AI. It doesn't know, because it can't predict the future. This is my point. Yeah. It can predict things based on weather and things like that. So yes, you could predict maybe a tsunami happening, which hits Japan. So do you want to be selling the yen? Buying everything against the yen? Yes. So yes, it'll be helpful in that respect. What I would probably do in that case is go flat. If it doesn't happen though, what I'm going to do is take a loss for no reason. So if it does drop, what's it going to do next? It doesn't matter, does it? If I understand correct, your trading is based on a robot trading on your own programming based on MT4. And if I want to run similar strategy as you can purchase this, yes. You can trade it all manual. So if you want to trade the way that I trade, start with the position trading bootcamp on the website. Links going on the bottom all the time. But start there, watch that. If it makes sense, there are tools out there to help you do it. You can apply this. This is a methodology. This is a system in itself. Based on my testing and the way that I understand the market, I've been trained, and how I work, this works for me. You can apply this methodology to every single mean reversion strategy that exists. Yeah, because if the market moves and you're playing a pullback, which is what mean reversion is, this methodology can be applied to all of that. Every one of them. So if you've got a good Bollinger Band strategy you really like, but you can't make money out of it at the moment, watch this, use that strategy, but apply the methodology that I teach in here and watch what happens to the results of that strategy. Yeah. So you don't have to buy anything that I sell. I sell my stuff to help me fund me doing this. teaching people. I don't make my living out of it, but I produce and spend a lot of time developing and doing stuff. The 10 o'clock news has just come out. CPI is 6.1 off of 6.3. It's negative. 5.3 off of 5.5 is negative. 6.5 as expected on the unemployment. So it's all negative euro. Not a big reaction. So this is, as I said, this is a year-on-year figure, a year-on-year forecast. So it's not as important as the quarterlies and monthlies, but it is negative euro. So see what we get. A little bit of volatility coming in, but not a lot. So yeah, so you can use my EA. My EA, all my EA does is scale in for you. So you can do all the analysis. You can trade everything in the bootcamp manually. So if you want to trade my strategy manually, you can do it. It literally is an RSI, right? And this indicator, which is the market reverse alerts indicator. But this is basically a signal indicator. You don't have to use market reverse alerts. I use it because it's a structure break and it means that the buyers are on side or the sellers are on side. It's a confirmation that the guys that I want to trade with have started to trade in my direction. You could use anything as simple as a bullish or a bearish engulfing. You could use a 5 moving average cross. You could use anything you like, but I have developed this strategy using this, which comes with MT4, and this, which I built. I use ADR, and I've developed an indicator for ADR. All ADR is average true range of the daily. ATR comes free with MT4. If you just want to use the standard ATR indicator for the daily chart, you can do. I've built indicators, though, that plot everything on the charts, show you where the ADR levels are, the probabilities, etc., etc. You don't need it. You don't need any of it. You can do it all manually. Hell, you could open up a chart, open up a time frame, flip a coin. If it's a head, go long, and it will work. Yeah, it is literally playing off of market movement, understanding how and why this thing moves, and then not losing money because you place an order in the market to tell the market to take you money. Remove that, and it doesn't matter how you get in. If you want to get AI to predict whether you should go long and short on a currency and at what time, do it. Position trading methodology. If you apply what I teach in here to an AI picking a random result of 50-50, it will work. It just does, because that's what happens in the markets. They go up, they go down, they go sideways. There's only 3 constants. Yeah, it will either go up or down, and it will move through time. Those are the only 3 things that happen to a market, any market. Yeah, this is caused by buying and selling pressure. This is caused by the timing of those buy and the sell orders being placed. There is nothing else. And it doesn't matter what you look at in the past. It's got nothing to do with what's going to happen to the buying and the selling pressure over the period of time coming today. What news events are coming today are not the same. The interest rates today, when the news was released last month, are not the same. Yeah, the amount of people in employment today are not the same. How much my energy bill is today is not the same. Nothing is the same. So therefore, nothing is going to affect this market in the same way as it has in the past. So by using things in the past to predict the future, futile. It can give you an edge. Yeah, we know when you look at an RSI, and this is why I use the RSI, we know that when this thing gets down here, it goes up. Yeah, we know when it gets above, I haven't gotten above, but when it gets up, it goes down. We know propulsion candles get filled. Yeah, all these grey ones on the chart are all targets. If you'd have gone, every time it pushes above one of them, if you'd have hit the short button, eventually you'd have made money. These ones you wouldn't have. Yeah, that one you would. Everything gives you a probability. Everything gives you an edge. Nothing gives you any indication as to what's going to happen next. This is going to do that or that over the next week. I have, or next, well, on M5 chart over the next few hours. I have no clue which way it's going to go. Neither do you. Neither does AI. So why predict it? As soon as you stop trying to predict where I should put an order to lose money, you start making money because you've removed the thing that makes you a loss. We were talking about earlier about no nonsense Forex. And and how he teaches and what he teaches, right? And everything that he teaches is based on using ATR stop losses, which is one step above what everybody else teaches, which is using pip-based stop losses, because the pip count on two different instruments is totally different. So you can't use this a pip. You can't say, I'm going to go long on the 5-minute chart with a 10 pip stop, because a 10 pip stop on the pound New Zealand is totally different to a 10 pip stop on the euro pound. One of them is going to be pretty much a quarter of the average daily range of the pair. The other one is going to be what it does in every 5-minute candle. Yeah. So it's one step above, but he teaches to basically place stop losses a better distance away based on what price is doing. But everything is based on what price is doing now. So when you look at everything else out there teaching-wise that teaches you to do stuff based on stuff that's happened in the past and the movement that things have done in the past, if you think about it, it's irrelevant. Look at ADR. The pound New Zealand ADR 3 years ago was 350. It's now 178. So if you built a strategy 3 years ago and you said, I'm going to go long on this condition on the pound New Zealand, and I'm going to put a stop at 350 pips because that's what the daily movement is, today that strategy fails dramatically. Because to do 358 pips, it's got to move at least 2 days solid in one direction. 3 years ago, it would do that in 1 day. So your strategy is completely flawed. At least with using ATR, you're using the average true range of price movement over the current market we're looking at. At the moment, what is this thing doing? At the moment, the euro, US dollar, is moving on average 62 pips a day. What's it going to do in 3 months' time? It's going to move on average an amount. If you're using ADR, this adjusts on a daily basis based on what this thing is doing. So if all of a sudden we get a war in Europe, this thing's volatility is going to go like that. So we just adjust our risk and our target parameters based on what's happening now. That's the difference. Again, it's all taught in the bootcamp. But, you know, No Nonsense Forex talks about using that as well. And it's, you know, there's a few traders out there that I love their content because they actually know what the hell's going on. Most people are just trying to sell you something, of course, aren't they? At the end of the day, buy my course for £2,000. I'll teach you what everybody else has taught you. I'll just change the language and do it in a different way. But it's all based on stuff that's happened in the past, and I can't predict the future either. Thank you very much. I'll have to buy my Porsche. That's what happens, isn't it? That's the trading world. Do a quarter over 1 ADR. Yeah, so Michael's just said, if you want to change your risk parameters, if you risk 0.25% over 1 ADR, you're risking half as much as if you risk 0.25% over half an ADR. So you make less money and you will get into less drawdown. But your result will be the same. And again, all taught in the bootcamp. The reason we measure our success on percentages is because percentages are the same whether you're trading a 10K account or a 100K account. The percentage return, percentage risk, percentage gain is the same. How many pips you make has got nothing to do with anything. How much money you make has got nothing to do with anything. It's all to do with that. So if you adjust your risk parameters based on that, I should have had an inside bar break while I've been talking. Yeah, there we go. So we've just made 700, 1200. So that negative result, we started off with a negative, whoa. We started off with negative $52. We then moved to negative 1,000 and something ish. And we've just taken an inside bar break long with 1.5 R and a trailing stop to bank that. Now we're in positive. Done for the day. I've earned $270 today out the DAX. That's the new version of the EA. If that doesn't work, we wait for the market to give us an opportunity to make a quick scalp to get our money back and get ourselves positive. The whole purpose of this is it's a loss recovery system. Works. Not all the time, though. It will lose. Because I don't know whether it's going to work or not. The odds are 50-50. Lambo advice. Gold buy, Daniel, go for it. We haven't done gold today. We've missed gold today, haven't we? There's gold. There's gold. There's Mr. Wick with his gold suit. Gold, basically, obviously wait for the news. So this afternoon, gold is going to go up or down based on the news. And the news will be positive or negative. If the news is positive for the US dollar, this will come down. If it's negative for the US dollar, it will go up. But right now, we're sitting down at this range low that we've broken on gold. So all these targets to the downside are still very much in play. We've got a little gap there as well. There's a phone. So I'm waiting for the doctor to phone for my son. So, one sec. Sorry, just make sure the wife's got the phone. So yeah, so gold, obviously we've got this low here, which we broke through. Price discovery, balance, push back up again. So this is a price discovery failure back up into balance. So we're sitting there. This thing could go either way. So it's all news driven. It's a US dollar cross at the end of the day. If you like it as a buy, buy it. I quite like it as a buy at the moment. Back up into all this propulsion, especially this double bottom break. That's a really nice propulsion gap there. So 175 ADR, but you're going to need some seriously negative news on the US dollar to get there. I'm new to MT5 / EAs. Do you have any dummy guides on how to run extrapolate info on the back tests? No, just Google and try not to use MT5. It's absolutely terrible. Use MT4. Your broker allows MT4, use MT4. Don't use MT5. It's not good. You're going to buy the EA, buy it for MT4. MT5 is just bad. CPI, a dud. Yeah, that euro US dollar didn't really move. So that was your CPI candle. Outside bar, whipsaw. So euro's not interested, really. It's gone a little bit long. Although the estimates were down. This is the thing. The news at the moment is just pointless. People always try and trade in the direction of the news. So everyone will be shorting it now. Yeah. What are they doing on? Let's have a look at what they're doing on the euro US dollar. Yeah, so everybody's longing the euro US dollar at the moment. There's no cop bias whatsoever on it. So retail are longing euro US dollar. Sorry, no, retail are longing euro US dollar at the moment. So it'll be down here somewhere. Euro. Oh my God. Why has crypto suddenly crept in here? Oh, I need to change my algorithm. Somebody started reporting crypto. I need to put a filter in for that. Euro US dollar, where are we? Yeah, so 78% of the market at the moment is long euro US dollar. So you would expect a move to the downside on this, potentially. But I'd say, obviously, today, I think what we're going to do is wait until the news for the US. So, holding pattern at the moment. Look, that's where we opened. That's where we are. Waiting for the unemployment figures. Unless you remove the talking heads in government and central banks, AI has no place in trading. Yeah, that's probably true. The thing is, this is the same for all trading, not just for AI related trading. There's multiple ways to crack this, and there's multiple time frames to analyze on. So when somebody says gold is a long, yeah, I look at gold and go, right now, I agree with you. It's an M5 reversal, structure shift to the upside from support. Yeah. You say to somebody else who is an investor, gold is a long, and they'll be saying to you, no, structure's just broken to the downside. It's a short. You say to somebody trading on the 4-hour time frame, gold is a long, they'll be saying to you, no, we're in a down channel. I certainly wouldn't be longing it here. This is exactly where I want to short it from. Yeah. You say to an AI, should I buy gold now? if you don't give it parameters for your entry, your exit, your risk, how can it possibly give you any kind of influence as to whether you should be buying or selling this instrument? What's going to happen this afternoon when the employment figures come out? Yeah, just, Biden's going to come out and say, this debt ceiling stuff, it ain't going to work. We're not signing. What's going to happen to the US dollar? What AI will probably do is just come back to you, which is what it's usually said to me. We can test it. You can ask it. Should I buy gold? Why did that not type? It cannot provide specific financial advice or predict the future. There you go. Why didn't I just type that instead of waffling? How's it going to help? It cannot predict the future. Performance assets like gold, investing in gold or other financial involves risks and subject to market volatility. It is always recommended to conduct thorough research, seeking advice from a financial professional, and consider your own financial goals and risk tolerance. Can't help us. Factors such as economic conditions, geopolitical events, inflation rates, and currency fluctuations can influence the price of gold. It's important to carefully evaluate these factors and consider how they will align with your investment strategy before deciding to buy. It can't trade. There we go. Answered by the AI itself. Are you looking to sell the new ORB as a product or as an update to the original? It can't be an update to the original, unfortunately, because of the way that the original works. The original works off of multiple time frame breakout groupings. So you have in the settings 3 breakout ranges there and continuous mode. I can't shoehorn the new logic into that framework. It doesn't work. So this has all been completely stripped out, removed. So it can't get in there. Just doesn't work. It just doesn't work. I did place it in this EA, but the logic is difficult to explain, but the logic contradicts with itself. I could write a new part of this new logic, separate it, put a drop down in to say, don't do this, but do that. But then every other piece of logic that controls the daily maximum losses, it monitors the open profit and loss and everything, it's all completely different. So I have to basically copy all that code, paste it all again down the bottom, make the EA twice as bloated as it was before, and introduce the possibility of endless conflicts and problems. So it's just not practical. I need to prove it first. It's not even finished. So I've got to test I've tested the logic. That back test you just seen was been running overnight. So this is the back test I've just run. Only one system parameter permutation on the new version. So this is the old version. This is version 2 of version 2, if you like. Because version 1 I found profitable, but version 2 I've found more effective. Doesn't make more profit, doesn't help with drawdown much, but what it does help with is equity curve. And I'm looking for something personally, which is why I'm looking at this again, for prop that is more stable. ORB works beautifully on prop. It's made me some very nice money out of prop, but it blows prop as well. I'm trying to smooth out the equity curve by using what seems to be, after testing live, the most profitable range, which is actually the 5 minutes before the open, not the 5 minutes after the open. And what happens after that. So it's looking at a different logic of trading, i.e. stop immediately if you won. If you didn't win, try and get your money back. And what that does is it flattens this curve more than having what we have on the current ORB, which is a really nice run and then a stagnation. then maybe a little drop and a really nice run and a stagnation. As market conditions shift from bull to range, or bull quiet to bull loud, or whatever you want to call it, bull volatile, basically, bull volatile to bull calm, we get an equity curve flattening. What I'm trying to do is use that pre-market to stop that equity curve flattening more, which means you're not going to make as much money potentially daily, but you will make money more consistently. And I think that's what people want. That's what I want with prop, is more consistency. I can make big money on prop, but I can't do it consistently, which is why I have to run multiple accounts and evaluations, because I know they're going to blow, because the strategy doesn't hold up enough long term. It works really well. Somebody DM'd me the other day. I can't remember who it was. Who was using the ORB strategy. He's made $6.5 grand last month on a 100k account with the ORB strategy. Passed 1, passed 2, $6.5 grand, stopped, withdrawn, done. Full knowing, as I've been saying in here all the time, at some point that is going to go drawdown, 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 blow. Nothing you can do about it, because you don't control whether or not you get a whipsaw 3 days running on the DAX. The market controls whether it does a whipsaw for 3 days running on the DAX. The strategy works and has a long-term edge, but it doesn't have a short-term edge. No strategy does. Again, bringing me back to what I've been talking about all morning, because what's happened back there in backtesting going to happen today, is it? Or tomorrow? It's going to be different. So that's what I'm trying to do. I'm just trying to flatten the equity curve by getting a model together that literally just stops with a profit. It will have max losing days again. So the max losing days, I've been setting a 3.5 grand, which is within a 100k daily drawdown limit. And I've been letting the winners run as well. So we get the odd 3 to 5k plus day. So you're going to get outliers. And the outliers, again, are random. Those are the outliers in the past. We don't know when the outliers are going to occur in the future, these big profit days. The days we've had where we've gone literally from the open, we've gone boing, 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 ADR, 15R return in 4 candles. Those days you are going to make an absolute killing. When are they coming? When it came last time was the day that the euro had a bank holiday. Markets apparently didn't get the memo. Absolute fortune that day. But all knows. How many times will the new version trade an inside bar in a session? So the new version, the current way that I have it set up is you have a day, you have an end of session. These green lines where they stop, that's end of session. So end of session at the moment, I have set to New York Open, half an hour before New York Open. And what it will do is, again, up to you, close those trades. If it has open positions, closes them there. Yeah. Or whatever. I mean, you don't often get many trades open there, to be honest, because if you're using a trailer, which helps with the drawdown, you usually get stopped out in profit before you get to that end of session. But it will either stop there or it will stop when it gets into profit. As you can see, it's not trading anymore now. It's stopped trading because we've made $271. So it's set to stop at profit. The idea is with this strategy, and this is it, this is why this is the pre-market 5 opening range breakout. It isn't anything else. Yeah, literally this trades the 5-minute pre-market. You either win or you don't. If you win, you stop. Yeah. If you get 5 days on the trot where it wins, you're going to be taking home somewhere in the region of $3,000 to $10,000. Stop. Right? If it doesn't win, let's see if we can trade ourselves back with a proven inside bar breakout strategy on the indexes. But if we get to a maximum loss limit, in my case, I've set it to 3.5k, which is 1.5k lower than I need it to be. And another reason it's there is because on a double win day, you make 3,250. plus. So it either stops when it's made a max loss and it goes, nah, right? So again, we've had days like this. So what you'll get is a horrible day where you just get breakout, fails, inside bar, outside bar, fail, fail, move, inside bar, fail, fail, move, inside bar, fail, fail, stop, just stop, right? This is not good trading conditions. This is what humans can't do. Humans can't go, no, 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 this isn't working today, and walk away. If any of you know Tom Hugard and have followed Tom Hugard before, how many days have you seen in his channel he just goes, I've lost 22 grand, I'm off, bye, I'll be back tomorrow. Yeah, good traders know when they're not in the zone. Yeah, read Mark Douglas's book, Trading in the Zone. You can identify when you're in the zone and when you're not in the zone. When you're not in the zone, the EA goes, I'm not in the zone today. He's not in the zone because the strategy is no good. He's in the zone because the market's not right for the strategy. So he stops. Yeah. So that's how it stops trading. And again, you can adjust all these variables, fine tune it. But backtesting will tell you roughly where you want it to be. Forward testing will tell us if it works. So again, I'm not going to release anything if it doesn't work. It will only come out if it's proven. The back testing's very good. But we know the opening range breakout strategy, the ORBEA is very good. It works. The long-term edge in the ORBEA is great. It makes money. I've made money with it. Lots of money. Lots of people have made lots of money with it. However, it will have a failure rate. So all I'm trying to do is just soften that. I might not be able to. And if I can't, I can't. It sounds like ChatGPT has lawyered up. I'm sure back in December, you'd have had a different answer to your gold question. Quite possibly. Yeah. Oh my God. LPFX are back again. They've obviously run out of customers to scam. So they're now out because they went quiet for ages. ChatGPT is obviously powered HealthyFX's marketing for them. Just spamming the chat again. Right, I'm going to leave it there. So I need to have a shower. I haven't had a shower this morning. So no ADRs. Oh, sorry, we have got an ADR. I missed that. Swiss yen. Didn't even see that pop up. Right, so we got an ADR on Swiss yen. So the Swissy seems to have reacted to the news. Let's just see if let's just watch that euro. The euro is not really reacting. The Swiss yen's had a decent pop. This looks like yen movement again. It's not much, is it? So this is, it's just hit ADR. So I've already got a long on it. Don't really know if this is yen. Little bit of yen weakness, that's all. It's just the Swiss franc is a little bit stronger today, so that's why that one's hit ADR. So you might find you get ADRs on some of these other yen pairs. But again, like I said, bear in mind, if they do continue to weaken the yen, the Japanese will intervene. This will come down hard. So just be careful with the yens. Shorts are much more fun than longs when the yen is intervened with, because you make a lot of money and you don't go into drawdown. So I'm always much more comfortable shorting everything against the yen, because when they power it up, they power it up. Like the Swiss franc, it doesn't stop for days. So so you have got an ADR, but keep your eyes on this. I don't think you're going to get a lot of movement until this afternoon. So we've got Lagarde speaking again in now. Lagarde is speaking now as well. So watch this. That wasn't there a minute ago, was it? So we may have Lagarde saying stuff. So watch Financial Juice. And if you really want to, watch the speech. But German Savings Bank Conference in Hanover. So she might come out and say something more about interest rates and rally. The fact that inflation is coming down takes, or forecast is coming down, takes the pressure off interest rate rises, which could mean it takes the pressure off the next 2 interest rate increases that they're planning. So we need to just listen carefully to what she says. But main movement is going to be 1:30 and 3 o'clock this afternoon. So we'll be back on at 2:20 as usual, and we'll see how we get on with this afternoon's breakouts. And yeah, just see where everything's going. But don't expect a lot of movement. Lagarde's just said something important. Inflation is too high, and it is set to remain so for too long. Bullish. So yeah, watch the euro and the Swiss franc. Obviously, the Swiss franc will move with the euro, so we might get some bigger moves off of this. But watch euro US dollar. We'll probably get some bullish movement if she carries on going. Right, have a good morning. I'll be back at 2:20 for the New York session. If you need anything, I'll be in the Telegram group as usual. And yeah, have a good one. And I will see you guys later. If not, tomorrow morning, 7:50 same time. Have a good day.